Less enthusiastic about it. Still, long-term hopes related to robotics and autonomous vehicles in general, but also a lot of questions.
Yeah. Okay. So, Dryden, I want to get your thoughts on the group as a whole. Jed points out, as is correct, Meta is the leader in the group. What's your view overall on the Mag 7? And then I want to hear your thoughts shortly, Dryden, about Meta.
Sure. Well, we're positive on the entire Mag 7 because we're so early on in this full development of AI. We're just in the infrastructure stage, and now we've got to move over into implementation. So all of these companies are going to be winners in both as we develop the infrastructure of the AI, the next generation of productivity in America, but then also as you get into implementation, there's going to be winners there. And those, I think, that's the big horse race that we have to pay attention to.
Jed, I want to go back to you and let's talk a little bit more about NVIDIA. Although Meta is the leader in the group, NVIDIA is actually it's in the top three. So you got Meta, you got Microsoft, followed by NVIDIA. You believe that demand will stretch well into 2026 for NVIDIA. What fuels that viewpoint?
Yeah, I think Dryden's right. It's year 3 of this build out, but we are still pretty early in what seems like a mega cycle for AI infrastructure and data centers. NVIDIA, of course, is driving that. Their CEO is traveling the globe collecting orders from overseas. Here over the last month, that's been exceptionally successful. Sovereign AI is a real thing. And then I think industrial or robotics related AI is probably the next leg after that in a year or two. And so the buyer base is expanding. The existing buyers are going bigger each year. We're going to see Microsoft announce that here in a month when they report earnings and provide CapEx guidance for fiscal 2026. So just exceptionally strong and diverse demand for NVIDIA products.
And then, Dryden, I want to go back to get your thoughts on Meta. So, again, it has been the outperformer in the group. Today they announced, which I cringed at this, that they're going to be doing ads or on WhatsApp. And my producer rightly pointed out, look, you get it for free. So what's your view about the continued outperformance here when it comes to Meta?
Well, I think in each of the Mag 7, you have to figure out why they are exceptional. They're all exceptional, but figure out why. So Meta has the ability to monetize their advertising platform, and regardless of where they are, they have a lot of domestic revenues here. They're able to continue to do that, and it's something that people are always using. It's how we fundamentally communicate. So we think Meta is going to continue to outperform for that reason, and they have multiple platforms that people are using. But the monetization of these things goes forward far beyond that as we get into implementation. So I don't think in this horse race analogy again that you can count out Apple or Amazon or Microsoft, because all of them have unique capabilities to capture the activity of the users, and this is where this build out's going to come from.
Dryden, let me ask you a follow-up on that, because you make a great point in terms of the losers in the Mag 7 year to date. Again, we've got gains on the board today, but Apple has been a significant underperformer. Apple and Tesla have been the worst performers. Apple's actually now at the bottom of the list because Tesla's regaining some ground. What's your viewpoint on where it goes, and could it even potentially catch up?
Well, for Apple, absolutely. You have an organization that has 2.4 billion active users worldwide. That's larger than it's almost twice the size of China. And so when you recognize that, Apple sometimes is a little slow, but when they get it right. And so when they're able to integrate AI into all those devices, that it becomes completely a part of someone's life. And therefore, this implementation piece of it is going to be easier for Apple than all the other companies. So they may be lagging right now, but I think this is one of these come from behind stories, because they've just got so many people for which they are an absolute extension of their arm. People, go nowhere without their iPhone. And so this is what's going to be important. So if we think a little long term here, if we're looking at what's the next 2 or 3 years, you're going to see Apple become in a position to dominate once they kind of get the logic and the reasoning right and move beyond just kind of the copy paste part of AI into the absolute utilization and implementation.
Dryden, you make a great point, because literally,
Siri, test the VWAP here.
Phone, I'm like, there it is, an extension of my arm. Jed, I'm going to give the floor to you for a 30-second final thought, especially when we think about Apple or Tesla.
Yeah, Apple, they're behind on AI right now, but people are not ditching Apple to buy the Google Pixel or Samsung devices yet. So that shows you how strong the ecosystem is. They have time to try to figure it out. Hopefully they're successful on that. They promised us something in the spring of 2026 here last week, so we're all going to be eagerly waiting.
Yeah, we'll see if it's enough to get more people to upgrade their latest and greatest to the latest and greatest. All right, thank you both. That's Jed Ellerbrook, Argent Capital Management, Dryden Pence Capital Management. Thank you as well for joining us today on Trading 360. I'm Diane King Hall. Download the free Schwab Network app, available in the Apple App Store. Tune in 24/7 on schwabnetwork.com. Fast Market up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also,
even as we are seeing, this is how the Dow closed on Friday. This is Friday's trade, but if you can pull up Dow futures maybe in a bit. In Friday's trade, you had the Dow down over 770 points, the S&P 500 down about 1%, and the NASDAQ Composite about 1.5% as well, because U.S. markets were plunging in Friday's trade as Israel attacked Iran. Bond yields spiked as well as Israel-Iran tensions escalated, the 10-year at 4.4%. All eyes, of course, are now on the Fed meet outcome this week. For us, it'll be Thursday morning when we will be able to dissect and see the impact of what the Federal Reserve is saying. Oil prices, of course, have spiked after Israel hit the South Pars gas field. It's one of the largest in the world. Brent was above the $75 mark. Asian markets have also risen in early trade, and kind of a mixed bag there. But the Nikkei nearly 1% up, and the implied open also showing that we're up in the green. Let's just listen in to the latest from what U.S. President Donald Trump has said on the Iran-Israel fight. He says he thinks it will stop.
Well, I hope there's going to be a deal. I think it's time for a deal, and we'll see what happens. But sometimes they have to fight it out, but we're going to see what happens. I think there's a good chance there'll be a deal.
All right. We're starting the conversation this morning with Ben Powell, Chief Middle East and APAC Investment Strategist at BlackRock Investment Institute. Ben, a very good morning to you from where we're sitting. Pleasure, as always, to speak with you. Do you see a limited impact as things stand in the conflict we're seeing between Iran and Israel and the escalation we've seen in the last 24 to 48 hours?
Good morning. Great to be with you. Yes, for now, the market is very much, I think, treating this as a contained episode, at least for economic implications. Of course, it's a human tragedy, that goes without saying. But for now, the market is very much treating this as something which is going to be contained, and I think is implying that the damage to energy infrastructure should be relatively limited. So far, the attacks have been very, very targeted around military and nuclear kind of facilities. I think deliberately avoiding some of the key energy infrastructure. So for now, yes, of course, we're all watching very anxiously. There's always the risk that this could spiral into something more significant, bringing in more regional and perhaps even global players. But for now, the market is perhaps surprisingly, but the market, as we wake up on Monday morning, is mostly shrugging this off and looking to move forward.
How crucial would the market perception of the US participation in the conflict be? Because a few people believe that if the US were to get involved, then there could be a swift end to this, and that from an investing lens is positive. I mean, leaving geopolitics aside, from an investing lens, that might be considered positive.
Absolutely. If we can, as President Trump was saying, overnight our time, if we can get a deal and see a ceasefire, hopefully a permanent cessation of hostilities, clearly that would be tremendously positive for the, how can I say, the aversion of the very bad scenario. So for now, as I say, the market is treating this as a contained issue, but we're all acutely conscious that even the best laid plans can go wrong and spiral into something unexpected, unforeseen, and much more critical. So taking that off the table, perhaps with US intervention, encouraging both sides to come to the negotiating table and come to a deal a bit more quickly. If we were to see that, that would be straightforwardly positive news for markets.
Morning, Ben. Just zooming out a little bit from just this conflict to talk about everything else that may have gotten pushed to the back burner. The last time you spoke to us, I think one of the comments that you'd made went viral, where you're talking about the fact that across the globe, India is a country that you cannot ignore. I'm paraphrasing here. But has that changed at all in the current context? Are global investors perhaps holding back the checks just so that a semblance of normalcy comes back? And do you think that there will be a pause, if anything?
A little bit. I mean, it's quite normal for investors to, how can I say, react cautiously to the headlines that we're seeing vis-a-vis the geopolitical context. So that's totally normal and should be expected. But there's still a lot to like in the world from a market perspective. Globally, we have the astonishing...
So what we're seeing happen right now is simply price move back to about the midway point of the entire move we've seen today. See, we bounce here off of around 6041 all the way up to 60463. VWAP right about halfway.
The BlackRock Investment Institute, a continent-sized economy, tremendous kind of demographic prospects, a growing labor force. But I think at least probably even more importantly is the gains we've seen in efficiency, productivity, which look set to continue. So it's a complicated world, that's for sure. In aggregate, probably we're all a bit more nervous given the context, but there are going to be standout winners. And yes, we at BlackRock Investment Institute continue to have India as a winner overall, even in a turbulent time.
Let me drill a little deeper into that concept. So within India, I'm just curious what you see as promising right now, specifically. And I know that you're looking at the artificial intelligence story globally. There's not too much in the way of a play in India specifically, but are there beyond that, are there promising trends that you see?
Absolutely. So this is a well understood story. The astonishing kind of technological efficiency gains we've seen in India, playing out over the last 10 years and more, I think is an ongoing bull story where we have this potential for more and more efficiency, more and more people coming into the formal banking system, perhaps even into capital markets over time. So this kind of trend, I think we can say it's well established and well understood. But I do think in a more turbulent world where even assets like the US Treasury maybe aren't completely safe, I think global investors are being compelled to look further afield, be that by asset class or be that by geography. And again, I think when we're looking through the emerging market kind of context, India for us stands out as a pleasing combination, clearly a continent-sized economy that can to a large extent, look after itself, even in a very uncertain global trading world. And we've got the ongoing double tailwind of a growing labor force and a more efficient and productive labor force. So for me, where I'm focused is on the domestic demand story, the kind of self-help, if you like, as India becomes an ever more prosperous, successful, efficient economy. Lots to like.
Just a point, Ben, on what could be a fly in the ointment is the July 9th deadline of trade tariffs. Do you think that all markets, including the Indian market and global equity markets, analysts have sort of been underestimating the impact of this, or that we've shrugged it off too early?
Yeah, it's been very interesting, actually, to your point, to see how resilient the market has been since Liberation Day. So we had the shock of Liberation Day, markets down a bit, and then we've just seen this really amazing kind of global rally. So trade tensions are going to continue to be a feature. This is not going to be a short-term kind of situation where we get through July 9th and then we're kind of in the clear. I think the US administration's style, very differently from predecessors, is to have quite an active trade policy, even a very active trade policy on a bilateral basis. So with 200 countries, in the world, it's going to be kind of relentless trade negotiations, trade tariffs, trade tensions, persistently. But for India, we're all watching at what's going to happen in the G7 over the next day or two to see if there can be kind of positive signals coming out from that. US naturally will want to be seen to be playing tough. But again, sorry to belabor the point, but again, it does feel like India is an economy and country that both of the strategic rivals, China and the US, will want to be on good terms with, given the economic, geopolitical heft that India represents. So let's see how the G7 goes. It's going to be complicated. There will be some, I'm sure, kind of disconcerting noises, but we feel somewhat reassured that India is in a relatively good spot just because of the very huge structural significance that India presents to the US and also to China as well.
Ben, just one follow-up, and that is the markets are probably used to geopolitics, but we've kind of forgotten about the rare earth issue, maybe because of the US-China talks, also about the tariff pause, which ends after the 90-day period, so on and so forth. Does that have the potential to disrupt the equilibrium, if you will, in equity markets worldwide, or do you reckon that could kind of play spoil sport?
We're still positive. So our view would be from BlackRock that we've learned, I guess, over the last couple of months that the US administration, they're not kind of fanatical, right? They are responsive as they had a kind of market negative impact. They slightly lessened their aggression level vis-a-vis trade tensions. So if that's the view, and that is our view, and I think it's the market's view, that the US administration is going to approach these various kind of discussions. Of course, they're going to try and do the best for America. That's fine. The approach may be somewhat more aggressive and even kind of combative than we've been used to over history. But if it's true that the US administration is very mindful of the negative impacts that they could have on their own economy and their own market if they go too far, then that gives us a degree of comfort that they won't cause us too much kind of problem. But look, we're all kind of learning in real time. So we'll be watching that July 9th deadline as closely as everyone else. We stay positive for now, but for sure, there is some risk around this. And again, we're all going to have to, I think, learn to live with this. It's not
Order
going
filled.
away. Sorry for that, but it's going to continue to be kind of a news story and a fact of economic and market context for many years to come. We stay positive, but of course we're watching.
Potentially found our ES entry here. It looks like 1694. Let's see where this takes us. Up 187 bucks on this trade right now. Let's see if it holds.
Just to get a sense of where the situation is moving and how worried we should be, Ryan Bowles.
It's about a point and a half that we're up, but it looks like it's just getting pushed back down. So we'll see if we just take here. Oh, there we go, push.
Is there an underestimation of the level of escalation we could see between Iran and Israel? Have we seen the peak of it yet? And what are you making of some of the statements that are coming from Washington regarding this so far?
So I don't think we have seen the peak of escalation, but there are many steps that can still be taken in the course of this ongoing conflict before we hit kind of the absolute worst case scenario that would cause, say, a market meltdown or an oil shock. The Iranians and the Israelis have started to target one another's energy infrastructure, but they aren't targeting all of one another's energy infrastructure, and they aren't spreading beyond their own geography. So that's just one example of the ways that it can get worse if they decide that energy is a no-holds-barred target, and then decide to broaden that out, especially on the Iranian side, to countries like Saudi
Order
Arabia
filled.
or the United Arab Emirates. And of course, we are watching very closely for whether or not the United States decides to insert itself.
Decided to exit my position here because of the slip that I'm seeing there. I mean, it can bounce, but we'll see. We'll see. I took $97 on this trade, so green here, but we'll see if this is the bounce. Might enter again.
Some provocation and decide to intervene offensively against Iran. And if that happens, then that would mean that the Iranians would have very little incentive not to cause an energy shock, not to attack the Gulf Arab states.
Ryan, do you see the possibility of energy prices escalating further from where we are? I mean, there has been a swift uptick already. Could that happen?
Well, I think that, and I really respect oil traders for working on fundamentals here. They're looking at supply, whether or not supply has actually changed, and not the perception.
There we go, pulling back again. And honestly, the biggest reason why I exited that trade is because I noticed I entered a 3 lot when I intended to only enter 1 lot.
But oil supplies were not fundamentally interrupted for very long, and Aramco very quickly repaired the damage, and we all moved on with our lives from that episode. And so Iranian threats of closing the Strait of Hormuz is not enough to cause folks to panic at the moment. On the other hand, if the Iranians decide to carry out even a limited harassment campaign
Order
in the Strait of
filled.
Hormuz, I think that would cause a lot of upward pressure on energy prices across the board, because it really suggests that tankers won't be able to cross.
Okay, back in ES here at 6094.50, just 1 lot as we originally intended.
If the U.S. is getting involved militarily against the Iranians, it suggests all of their bases within the region are targets of an Iranian retaliation, and the oil infrastructure alongside it and the gas infrastructure alongside it would be too.
Got it. Okay. Ryan, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time.
Thank you.
Now, viewers, just before we get to the trade setup, Tamanna, you've covered geopolitics your entire life, right? I mean, quick thoughts on this.
Yeah, so, it's there are a couple of versions which are coming out of it, and one is that maybe Iran doesn't have the kind of backing that they would have hoped for yet, which is my sense. Yeah, from the rest of the Arab world. Rest of the Arab world, definitely. China and Russia, what they do next is what matters, because Iran has been a pariah otherwise, apart from China and Russia. And China and Russia have not yet come out with the big guns to help them. America also is sitting on the sidelines. Usually by this point, you would have seen a US and a UK jump in to aid. And the fact that the rest of the world is not jumped in is what is keeping markets calm, in my view. Also, if you listen to what Trump is saying, and I mean, he's saying, I'm going to strike a deal, I'm going to get them to the negotiation.
Let's see, we're getting a push here. Up about 1.5 on this trade so far, total of $87. Up 2 points on this.
Which is why you're seeing the implied up in the green.
Yeah, US futures too in the green, so keep that in mind. And maybe it is in US interest to ensure that oil prices don't go up too high, right? Impacts inflation, helps Russia, all of that. So let's see if there is a swift end to this. From a humanitarian perspective, we certainly hope there is. Okay, what's the
hitting 2.5 points now.
All of this, right? I mean, remember, Friday was a bad day, so you don't equate what happened on Friday with what could happen today, because they seem like completely distinct days. The implied open is up in the green. It's very crucial to see that.
Let's go up 3 points.
Do the lows of 24,600 are protected this week or no? Because I think that's the crux of the trade setup, that you look at 24,600 as being the key,
Order filled.
key support level of the
Order filled, you heard it. Let's go. 3 point move here.
Now
up 247. Should have been 250, but minus commissions, up 247 on the day here.
I think anybody's guess. So you got to bear that in mind. That we'll keep an eye out for
You can see it.
prices go above $75 per barrel.
247 to
it becomes steady here.
242. I mean, 242.50 is where I'm at, but
from Will's perspective, I mean, the
you can see the trade taken here. It's just that bounce, right?
challenge only and only if crude
Entry 694.50, took profit at 60.97.50. So just quick 3-point move there. Let's see if it gets smacked back down here, or if it holds. If it holds, we're looking for another entry.
Investing in the global arena right now. Quick two things. I mean, from an optimum strategy perspective, for an investor, the optimum strategy is buying dips gradually. Do not go out and try and buy in one go simply because you think that the markets have bottomed out. This isn't over until it's over, but there are dips and you might want to buy dips gradually. The optimum strategy from a trader's perspective is to trade with strict stop losses. I mean, suffice to say, Tamanna, that things like oil upstream, etc., will be active in today's session as well, despite whatever the market does. And because the markets are in a bit of a uptick, at least that headline Nifty is very interesting to see if the broader markets have a swift reaction to this, or do they stay a bit subdued? So interesting.
I think one reason also why you're going to probably see some amount of strength in the Indian markets today is because even though we closed in the red on Friday, look at the recovery from the lows. It was astonishing. You're at least, I think, 200, 250 points above the lowest point of the day is where you ended up closing. So that is showing some inherent strength coming in. So yes, of course, I agree with you completely. Yes.
And just a word on maybe defense could be in focus, Tamanna, simply because Israeli markets on Sunday went up higher, led by defense companies. I wonder if Indian defense has that.
But Indian defense was buzzing on Friday's trade as well. So I agree completely. So defense stocks in focus once again. The Iran-Israel conflict will impact crude sensitive. So watch out for ONGC. ONGC was the big winner in Friday's trade. If you can just pull that one up, you had obviously the downstream companies suffering, but ONGC was 1.5% despite everything. Some of your paint majors, your airlines, everyone who has to depend on oil was impacted. But then a lot of clarity coming in that a few days of oil spikes is not going to hit too badly. Nevertheless, in Asian Paints, a Berger, and in Indigo, watch out for all of those today. Indian companies with large presence in Israel could also be in focus. I would mark out that one factor. So whether it's a Sun Pharma, it has a Taro over there, whether it's a Lupin, a Dr. Reddy's, Infosys, TCS also have establishments in Israel. So does Adani Ports. So, you have to look at some of those and see what is the extent of impact. So I must note over here a clarification that has come from Adani Ports.
Order filled.
That these rumors and these social media posts saying that the Haifa port has been hit are completely untrue. Now, let's just set up what you can expect to see today. The Nifty fell second day in a row in Friday's trade, but recovered 1% from the day's low, closed 0.68% or 169 points lower. Small and mid caps fell third day in a row, but outperformed the benchmark. Most sectoral indices recorded declines. Nifty, IT, Realty, Media were the only gainers. PSU banks, FMCG were the worst performers. Nifty has closed below the key level of a 30-day moving average.
Let's go. Running now, and re-entry was at 60.98.50. 60.98.50. So let's see if this push holds or if we get rejected here.
Resistance at around 25,000, I would say up to 25,200 perhaps, and support at 24,240. The Bank Nifty has fallen 4 days in a row. PSU banks have led the decline. Resistance at 55,940 and support at 54,850 for the Nifty. But then it's all about individual stocks as well. So let me start with those. I'm watching SpiceJet this morning, and I found this quite astonishing, Neeraj. SpiceJet seems to be a bit of a turnaround story. And it's very interesting as well, and we're hoping Ajay Singh comes back and speaks to us. I don't know if you recall when we spoke with Ajay Singh, and he's like, we will turn around a profit, and then I want to come and talk to NDTV Profit about it. Mr. Singh, we're waiting to speak with you once again. So in Q4, These are the kind of numbers that we saw, an 18.5% improvement. This is just Q4 year-on-year comparison. In revenue and EBITDA, 83% up. EBITDA was 151% up, and PAT was 12 times up. So what are the factors?
It's testing that trend, right? Those lower highs, it's being tested right now. Let's see if it breaks. Pay close attention to Apple here, Microsoft, Amazon. Let's take a look at Nvidia and Tesla. Google bouncing. Where's our Nvidia at the highs? Tesla trying to break. Let's see where we go.
That is the average fare per passenger per kilometer for FY25 at 5.18 versus 4.9 last year. Not so much for Sun Pharma. Sun Pharma is a thumbs down this morning because the US FDA has issued 8 observations to Sun Pharma's Halol plant. Inspection was from June 2nd to 13th, resulting in a Form 483. Halol is a large plant with a history of US FDA issues. It remains under an import alert since May 2022 and currently has nil revenue contribution due to this alert. But the additional strictures may be a sentimental thumbs down for Sun Pharma. Swiggy is the other one that I'm looking at this morning. Might be interesting. So there's a note out which predicts that the MSCI India Standard Index expectations, the August rebalancing and the rejig, which
Kevin, when you look at this name, Lennar, you know, it's one of the bigger players within this space, but it just can't, you know, it's consolidated.
is Wari, according to GM Financial. So these are some of the ones I'm looking at.
413 to 408. So their prices are coming down. This is, if you're thinking about first-time home buyers or people buying a house for the, you know, for the first time or moving from a condo to, these are the houses they would probably be buying, the entry level. So no company needs interest rates to come down more than Lennar does. Tom, their PE is now below 8. And so they've got a dividend that's not guaranteed, but their balance sheet is pretty pristine.
Up another point here, a point and a half now on the ES position. Entry at 1698.25.
If the housing market starts to recover, you would think that this stock would recover first, Tom, because of the low price of their homes in average.
Yeah, they are for first-time buyers, step-up buyers. That's the area where there's the least amount of inventory at this point. And that's, but you know what, Alex? Kevin mentioned the PE on this thing is below 8. I mean, but that's across the board in the housing sector. Home builder sector is historically low multiples for these companies because of maybe the seasonality.
Up 2.5 points on this now.
Variables that price these stocks. But that being said, it's still 43% below its all-time highs.
Yeah, and if you look at sort of what guidance would be,
again, the lower high trend on SPY Qs, it's being tested.
For this quarter, the average closing price expected between $390 and $400. It's going down.
Right.
So they're trying to sell more homes, but they're doing so at the expense of their margins and at the price at which they're selling them, in the backdrop of an environment where maybe you have anemic inflation, but everything else is not getting cheaper. So you start looking at that and say, okay, maybe that explains why this chart is down and to the right and not up and to the right. Looking at sales incentives for the first quarter.
Right.
12.9% of the average selling price, but they were as high as almost 20% in the South and Central.
Slight rejection at that trend.
In the East region, which includes Florida. So watch their margin number. It's expected around their gross margin. Around
IWM small caps pushing though.
They're going to sell homes.
Let's see if that lifts us. We need tech to move to.
Lowering prices. prices. That's not a good recipe for shareholders' return when it comes to earnings, as that margin is being compressed at the moment.
Yeah, that's been a big thorn in the side of the home builders over the last year with those 30-year mortgage rates at or near 7% level. We need to get those lower, I think, for these stocks to do well. But you got an example trade in here for us, Alex. Break it down.
Yeah, neutral to bearish strategy, selling a call vertical above the market. Just going out to the end of this week, 112, 115, looking for $1. So $3 wide spread, looking for a $1 credit. You might have to move the strikes or think about doing something for a less price, but that's where I would start, is the 112, 115 for $1. Reason being is you have a max profit of 100, but you got that 2-to-1 risk reward. So risk 200 to make, 100 break even is at 113. Well, right now in real time, Lennar is trading at 108. So you got about, let's call it a $3.75 cushion to max profit, more like almost $5 to break even.
Yeah.
And you have a situation where the company is trying to grow, but they're doing so at the expense of their earnings potential. So with that in mind, not necessarily the rosiest backdrop for stock price appreciation.
Yeah, and the stock has moved down since you gave us this one earlier. It's trading closer to about 85 cents at this point. But let's break this one down. Really short-term positioning that Alex brought us. June 20th, monthly options that expire in 4 days. Selling that 112 call, buying the 115 call, $3 wide, short neutral to bearish call vertical, collecting roughly, we got $1 on there. That's what you can make on it, right? $200 at risk, as Alex mentioned. But Kevin, this gives you better probabilities of success, and it's risk-defying going into earnings. You're going to know probably, tomorrow, over the next couple days, if this trade works out, but it's pretty straightforward, selling an out-of-the-money call vertical, trying to take advantage of higher implied volatility if you think the stock, is either going to go lower, stay where it is, or go a little bit higher, but stay below that 112 strike.
June 20th, 112 call. Probability of finishing out of the money about 60, almost 67%. So about a 2/3 chance of finishing out of the money here. It's a bit inside the expected move, a little on the more aggressive side. That's why you see the probabilities a bit lower. But this is when you're daring the stock to rally in a time where there's just not a lot of good news. And if it rallies, it's got to rally, $4 for you to lose. So $4 and change. So, this is one, especially if maybe you're already long the stock, you're daring the stock to go in the other direction, Tom, because right now this stock is just heavy.
Yeah, and the anticipated market maker move, about $7 either way is what they're pricing in. But Alex, this is one of those things where you've seen the market snap back rally, and this was kind of got me. We're off of lows, up $10 from those lows in April, but this stock chart doesn't look anything like the overall market or a lot of other stocks that have rebounded pretty significantly from those April lows.
One other thing that I would add to this, you guys talked about that market maker move. There's a weird, gap between historical moves in this stock and how much volatility is priced in this time around. And that's probably for good reason. But the implied move is 6-7%, but the absolute value of the average price move over time is under 4%.
Okay.
So if it just moves 3.7%, which is its average move around earnings over time, even if it's to the upside, you're basically still inside of that move, or it's right to the move. So I would argue that almost it is at historical expected, right. Just there's a little more volatility this time, but that could be the opportunity to be a little bit more aggressive.
All right, yeah. Good look at the short call vertical there as an example trade there in Lennar, taking advantage of the higher implied volatility that allows you to collect a little bit more option premium. And thanks to Alex Crawford, senior equity contributor here, helping us break down markets in Lennar. But coming up after the break, we're going to be joined by Andy Swan from Likefolio for a look at sentiment data in Amazon. The e-commerce and cloud stocks down about 12% from its February all-time highs, but has rebounded over 32% from those April lows. Stick around, Fast Markets coming right back.
Trading at Schwab is now powered by Ameritrade, unlocking the power of think or swim. The award-winning trading platforms, Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on.
Approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder of Likefolio. Welcome back to the show, Andy.
Thank you.
All right, so happy Monday to you. And Amazon having a nice rebound here from those lows that we saw in April, like every other stock, it seems like. But what kind of data are you guys seeing on this front? Because it seems like the number of areas where Amazon grows revenue continues to expand as they grow, you know, not only cloud business, but now it's advertising, it's the Prime membership, it's everything, right?
Yeah, it's you know, everything Amazon does works really well. You know, that's an exaggeration. I don't know about the grocery business that they got into, but everything they do digitally seems to work. They have enormous distribution. They have exceptional ability to execute against a plan over multiple years, and we're really seeing that.
Looks like price getting smacked down. If we hold, we go back up to test potentially the highs. If we don't, we can go around the 60-80 mark on ES.
And it's gaining really, really fast because what Amazon is doing is not just selling products anymore. They're now selling influence, and that influence delivers a high ROI to its advertisers because, you know, shocker, people on Amazon that are searching for products are searching for something to buy on Amazon, and they're going to pull the trigger really quickly. It's really easy to see the direct impact on and return on investment that these companies and advertisers are getting. So they're in prime position to really take advantage of a growing space and steal market share from Google over and over again. And we see that continuing well into the future. The other thing that Amazon has going for it is its Prime Video. Their reach here is up 40% year over year. Consumers are just flocking to the Prime Video library. They love it. This gives Amazon another angle to advertise to people to you know, expand the value of the Prime membership, keep people hooked on that. And so everything we see from Amazon in all of these different, you know, I guess you could call them verticals, is extraordinary. And this is a company that you just simply can't bet against. In fact, this is one of the few, you know, investments that at Likefolio we have put the infinite hold stamp on because they're just going to keep winning. They have the DNA in their company to keep winning. They have a huge vision. And they execute against it really, really well. So all signs are green for Amazon here.
Andy, despite the size of this company, they continue to work towards getting leaner, right, with robotics and different ways to make and to regionalize their delivery systems to make it more efficient. And I think this Roku deal is something. I mean, Roku's up 8.5% on this deal. Amazon is up, up, but not as much as Roku. This is Roku stats. Half of they're pulling their addressable audiences is what Roku and Amazon's doing here, and I think it's pretty significant. Half of all streaming TV is done through a Roku. So this partnership of two strong companies. It seems to me like there's nothing but positive here. And for Amazon that's in AI and they're in cloud and they're doing all these things, you're right. Every business they're in, they're good at, right? And they keep getting better at it as time goes on. But this stock, Andy, as you know, it sold off from $240 to below $200. So it's not even anywhere near its recent highs. So, is the good news that you see, and your charts that you brought us today are incredibly strong, big numbers on both of them. So is that what you guys are seeing? Just all systems go, and dips should be bought in this name?
Yeah, dips should be bought on Amazon until you run out of money or you run out of dips. Everything you see from an execution standpoint, all of these charts that we bring up, whether it's Prime Video, whether it's advertising revenue, whether it's AWS, actual digital sales through their channels, they all look like what every entrepreneur projects that their company will do when they pitch to a VC. It's just up and to the right and steady and hockey stick growth. And for Amazon to pull that off at the size that it is tells us just how committed to efficiency, how committed to domination that this company is. It came out of Jeff Bezos's initial vision, and although his, he's not day-to-day operations with the company, his fingerprints are all over this, and it was set up, and this company was set up to win for a very, very, very long time. And I think they're going to continue.
Market view up again.
Not a company to bet against.
Yeah, that seems to be the theme here. Andy, when you look at the different segments of their business, you mentioned the advertising segment starting to grow even more and at a faster pace. That's almost pure margins at this point. Are there any other areas that you guys are seeing as far as your data goes that might be the next big thing for this company moving forward?
Well, I think Kevin hit on the Roku partnership is a real game changer. I think earlier results are showing that they're getting 40% more reach with the same budget and showing 30% less duplicate ads. And so what that is they're able to deliver a far greater impact to their advertisers, which are growing, basically overnight. And so both of these companies are winners out of this partnership. I think the stocks are reflecting that, really clearly. And I do think that that's the next big thing for Amazon because, Google, I think, is in a little bit of trouble here. People are starting to realize it. ChatGPT and these others are taking away a lot of search volume. And once those advertisers start to see that Google is unable to deliver the audience and the metrics that they once were, and that there's other places to put these ad dollars, Amazon is a natural beneficiary of that because, again, they can show that ROI immediately. And when they're expanding their reach through these types of partnerships, that's just a really big deal. And I think the market will take some time to absorb it, but the early indications are this could really accelerate what's already a great vertical for Amazon.
All right, great stuff, great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder of Likefolio, breaking down Amazon. You heard him, Kevin. He's saying buy dips in this name. And as you mentioned, the stock is still down pretty significantly from those all-time highs, down about 11% from the highs that we saw at the beginning of February.
Yeah, it's not even up for the last 6 months, Tom. It's still down 6.5% over the last 6 months. So this is the name that got beat up pretty hard in the global sell-off and has come back, but not making new highs. It's not as close to the new highs as the overall market is, and their data, like I said, is positive and keeps getting better. So, Tom, the paper money trade I looked at here is purely on the more aggressive side. It's a oh, by the way, and the other thing, look at the IV percentile in Amazon right now, 14%. What does that allow me to do in terms of my menu for a paper money trade? Bring my dates out, Tom. That's why I went all the way out to the July 18th expiration, bought the 215 call, bought basically the at the money call, and then sold just this week's 220 call, right in line with that expected move in the right column, Tom. So this is a call diagonal that's meant to be held for a long time. And at the end of this week, you extend duration into next week. They don't have earnings, unconfirmed earnings on August 7th, so they still have some time yet out there. So this is probably a little aggressive on the call diagonal, giving you about 31 deltas, but you got to be careful because of the date, because of the duration you're putting in this trade, it costs more than the width of the strikes. So this is a trade that on Friday of this week, if it doesn't get to 220, you're adjusting and moving those strikes even higher, Tom.
Yep. Yeah, let's break this one down. Call diagonal, paying more than the width of it. So we're going to get into those break evens. But buying the July 18th monthly options that expire in 32 days, the 215 strike call, right where the stock's trading. Selling the June 20th monthly options that expire in just 4 days, that 220 strike call. So $5 wide bullish call diagonal. Paying roughly, we got 630 debit on there. It's trading closer to 650, 660 right now because the stock has moved higher. But the idea here, and you see it from the risk profile, you want the stock to grind up towards that 220 strike, as Kevin mentioned. Now, you're paying more than the width of this call diagonal, so you're going to have break evens, anything probably above 216, 217, all the way up to maybe 230, maybe a little bit higher than 230. It's going to be profitability on this one, but you start losing money. If this stock starts to jump up to 235, 240, that's where it's going to get hurt again. But the idea here, as Kevin mentioned, you're going to extend duration over the next 4 days. You're going to get that opportunity or potential to roll that short 220 strike call. And that's when you start collecting credits. That's when your risk gets decreased. That expands potential profitability on this trade. So the idea is you're going to have 4 opportunities or potentials to roll or adjust the short 220 strike call, creating credits, extending duration on the trade. And that's the idea where, hey, even if it does go to 220, it'll expand the price of this call diagonal, but that's when you start doing those adjustments and rolls, collecting credits to increase profitability and potentially lowering that break even and the risk on this trade. So keep that in mind when doing this type of trade. You've got some assignment risk on that short 220 call over the next 4 days into expiration. But good look here at the call diagonal in Amazon, lasting about 32 days. All right, let's take a quick break. When we come back, we're going to discuss Cisco Systems. The stock's been having a strong 2025, just below all-time highs. Got upgraded today, too. We're going to talk Cisco when we come back.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Cisco Systems, let's get a quick market update. Stocks just off of session highs as we speak. The benchmark S&P 500 up just over 0.9%. The Dow Jones Industrial Average up about 340 points or 0.8%. Nasdaq's given up some of those gains, but still up 1.3% on the day. And the Russell 2000 small caps up 1.25% on the day. We've got some weakness in the dollar. The VIX is back near the 19 level at this point. You can see here from the heat map, we've got a lot of green on that screen, which is good for equity markets at this point. We're seeing some weakness there in some of the pharma stocks and some of the energy stocks as crude oil is off of those session highs above $77 a barrel. We hadn't seen those levels since early January, but now crude oil back below $72 a barrel. On potential de-escalation, but there's just reports that Iran just launched another wave of ballistic missiles at Israel. So we'll see how that pans out in the equity market. All right, let's get into a discussion about Cisco Systems. The stock's been on a pretty good run here over the last year. If you take a look at this one, up 43% over the last 12 months, up 3.7% just this month alone, and up 10% for the year. Kevin, when you look at, or actually, let's bring in George Tillis, senior markets contributor here to help us break this one down. George, it's had a great run, gets upgraded today, and it looks like this AI portion of their business is continuing to expand their footprint, right?
It is, and I think if you look at Cisco, we have to think about the legacy business of network equipment, particularly Ethernet equipment, and of course all the build out for data centers and artificial intelligence, because everyone really focuses primarily on AI semiconductor chips or application specific integrated circuits that for instance Broadcom sells, or even the end markets for AI like Gemini through Google, or Meta platforms with their Llama 2, Llama 4, or OpenAI. But if you think about all the needs for transmission, you have computations, and then you have basically huge transmission of all the results of these computations to the end markets. And so there's a huge build out of network gear, which includes Cisco Systems, Aristanet. One of the things about Cisco is it seems to be that their business strategy to build a comprehensive hardware, software, and security suite seems to be improving their scalable position. And this is essentially what Deutsche Bank is looking at. They actually now increased their price target to 73 from 65, and they move their rating to a buy from hold. And what they're actually looking at is going forward, improving EBITDA and top line sales growth. And here's the kicker, they're looking at mid-single digits. And this is important because if you look at Cisco as a business in both sales and earnings, they were typically, at least in the last 5 years on average, in the low single digits. So just a fractional improvement in top line sales and earnings can actually increase the gearing effect on common equity, which if you look at the last few years, the stock has actually broken above, and this is the second time now, a retest above the December 2021 high. So right before essentially the 2022 bear market, Cisco is trading above, but it's always been really a business that is more value and income orientated, not very much growth. But now, with additional capital allocation, including cash, stock repurchases, possibly increasing dividends, are paying now about $1, I believe 64 cents a share. But at the same time, the growth. So this is a value and income stock that has got some growth going for it. And like I said, those additional 2 or 3% growth metrics, both in sales and earnings, can be very, very impressive for a stock that's still right now about $250 billion in market cap.
George, this company, AI and the Splunk acquisition, like you mentioned, are making this company grow again. And, the problem is it's up 60% in the last 5 years, 46% of it's the last year. So a lion's share of their growth is just coming over the last year. The question is, the things they're doing to grow, is it all in the stock? This stock has run a long way for a company that Tom and I have watched for a long time. It was dormant if you put up a long-term chart for many years, as you know, George.
Correct.
Is what they're doing, is that enough to justify this kind of growth suddenly?
Well, so I think, it's a good question. So I think there is that concern. This is not typically a stock that does this, what it's done in the last year. So to me, that's very telling. It gives you an idea that there's a reevaluation of the earnings multiple for the stock. Now, this is basically what Deutsche Bank is looking at. They're actually saying that the growth rates now are catching up to the inflated multiple in the stock. If you look at the forward multiple right now, on this year's basis, 17 times. Next year, 16 times. Typically speaking, on average, it's around 16 times. So it's not trading at a lofty multiple based on next year's earnings. So therefore, there's a possibility that the earnings multiple compresses as the earnings increase, but the price, increases at a decelerating rate. So for what it's worth, I think this is a name that one would consider if you're an investor in it or looking at it as really a legacy value and income-based company. But it does have some potential growth, at least in the near future, the next year or two, based on consensus analyst estimates going forward. I think the Splunk acquisition is quite meaningful as well, because it does increase their scalable software position, but also enhances the value proposition of their ecosystem, which seems to have been quite successful, because one of the challenges that Cisco had faced is potentially attrition from customers that wanted an agnostic system where they could buy their hardware from companies like Aristanet, but then deploy their own software. Now Cisco is basically saying we're becoming fully integrated in software, so we're providing you a fully vertical, scalable proposition, and that might be something a lot of these companies, either small or medium-sized based businesses, potentially also the big ones, find very attractive in the name.
Yep. And then I did notice their security revenues jumped last quarter, 54% year over year. So they're really starting to push more into security also. And having a partnership with NVIDIA is not a bad idea on this AI build out either at this point. All right, great stuff as always. Thanks to George Sellis, Senior Markets Correspondent here, breaking down Cisco Systems. Kevin, George mentioned the dividend, if it continues to get paid out, it's about a 2.5% dividend yield. On this one. PE on the trailing base about 26.70. So it's getting up there. As you mentioned, valuation may be a concern, but their growth rate's been pretty strong. So I looked at a strategy that creates yield because it's a covered call strategy, while if you still want to own the stock after this run-up that we've seen. So I looked at a covered call, Kevin, where for every 100 shares of stock you buy, you sell an upside call against it. I went out to the July monthly options, July 18th, so 32 days to expiration, sold a 67.5 strike call. You're going to pay a debit of around 64.60 on this one, or 64.90 on this one. So you're buying the shares at a discount because you sold the upside call against it. But Kevin, those highs that we reached in February around 66.5, this is just above those levels. So this type of strategy allows you to collect that dividend if it continues to get paid.
Trend being tested again.
You're capping your gains, but after this solid run, maybe some consolidation's warranted in this name, right?
The covered call strategy is one that allows you to keep the dividend while selling out of the money call. So you're getting dividend yield, but you're also getting yield and protection from the short call, Tom. So this is, probably one of the first trades that someone should make when you start getting into options is covering some of your long stock with short options. Now, you can do that initiating that position as well, like you're doing here, Tom. So yeah, this is selling it out of the money call, buying the stock, creating that synthetic short put. Remember, the short cash secured put has the same profit graph, but this allows you to still receive the dividend, which at 2.5%, not guaranteed, but also a pretty solid investment there as well, Tom.
Yep, that debit you pay $64.90. That's going to be your break even, also to the downside. Your risk's about $6,490. So it's capital intensive, but you get to keep it, or you have to own those shares to collect that dividend if it continues to get paid out. But Kevin, the whole idea here is, hey, I'm comfortable owning the shares, but then as I get closer to expiration over the next month, I can start to roll or adjust that short call, right, to keep the yield going on that side of the trade also, besides the dividend, right?
Yeah, exactly right, Tom. All you're doing is, like I said, if you're initiating the position or adding to the position you already have, you're just hedging by selling out of the money calls, collecting that theta, and each time that comes up for expiration, you either, allow the stock to be taken away, close out that short call and extend duration. People do this very robotically, Tom, and it adds to your overall returns.
All right, good look at the cover call there in Cisco Systems. All right, that's going to wrap it up for us today here on Fast Market, but stick around right here in the Schwab Network. Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Next Gen Investing, and of course, happy Monday as we kick off this shortened trading week as we are closed on Thursday in observation of Juneteenth. But I'm Jenny Horn, as always, alongside Alex Coffey, and I will say that now looking at markets which are pretty firm to look at things here at the noon hour here in Chicagoland, it has been, a pretty nice comeback as far as the overall markets over the past several weeks. Last week, not really an exception, although we ended a bit on a more quiet note. But this week, I will say, it's all things Fed, as we do have that still major event on Wednesday.
Yeah, obviously there's still geopolitical risk in this marketplace. You see it in oil, you see it in the market itself, in the movement, in the headlines. Obviously, strong start to the week, but we are on the lows basically the last couple hours, so something to monitor as the market starts to slip here a little bit, but all things considered.
Still holding my position on ES, determining whether or not I should cut, if I should average down, but still holding it here. Target overall, if we do get a bounce back, ideally 6105 is what I'm targeting. High of day would be nice, even a break of that. But if we fail to hold here and we reject, 6085 is the immediate next level that I'm eyeing with a potential drop all the way around to like 60, 77, 50-ish area to begin with before a larger spill or before going red on the day, if that happens. But a bounce back is what I'm kind of eyeing, just seeing where the momentum has held here. The fact that we have retraced about 50% on the morning's move, so potential bounce back here in play.
On your radar, as well as looking at some charts as well as example trades of AMD and Roku. We will be looking at IBM with another all-time high today, a name that it continues to impress, and a lot of these software and hardware alike stocks that are exposed are seeing a pretty nice day. IBM today now about 0.8% off that high, but still having a phenomenal session. We will also be discussing the Schwab Women Investors Survey and some key trends among the female, of course, investors, a very important demographic to my own heart. And we'll close things out here with Celsius, which is seeing...
We do want to watch Apple closely here. It needs to come back above VWAP alongside a push from Amazon and Microsoft here. So we'll see.
So volatile at that for Celsius.
Yeah, still down on a 12-month basis, almost 30%. But yeah, a nice bounce back underway for Celsius. Analyst upgrade today, maybe being the catalyst, but a name that is certainly volatile. No question about that as it kind of matures as a company and builds out its logistics network. Let's talk some of our movers, though. Meta, one of the Magnificent Seven, is I would say the headliner of this group. It's the first name we're looking at here. It's closing back in on 700 a share. Really interesting trade so far this year. We started around 600. We trade up to 740. We go all the way back down to sub 500. Now we're back 700. So has not been a calm 2025 for Meta.
No.
It certainly has been difficult on emotions and I guess heart rates and things if you've been a Meta investor. But all things considered, really impressive comeback, really impressive performance for basically every time frame you want to choose when it comes to Meta.
I know, and this was our coined name that was up for like 20 straight sessions. It was the most monumentous run of any, I believe, of the S&P 500 stocks that we've ever seen. So that was amazing in itself. Meta has since given back a lot of that strength. There is something I think psychological about that $700 level, as we did touch it last week on Tuesday. I believe it was briefly, or at least neared last week at some point later in the week, but now once again nearing that key $700 level. Also seeing some momentum today on the fact that it announced WhatsApp will be showing ads and offering these paid subscriptions now for the first time ever. Meta is set to begin displaying ads inside its cross-platform messaging application, of course, that's known as WhatsApp Revenue. It's amazing to me. I'm not a WhatsApp user, but I know this is like the third, I believe, largest social media company in the world. I mean, everyone internationally is on WhatsApp. It's amazing this wasn't an already, really tapped resource for revenue, but they've seen ads be successful on other platforms. I do remember, because we're old, I remember when they unveiled ads for the first time on Instagram, and it was like, wow, it was a really different type of Instagram. It hasn't made me stop using Instagram, but it did definitely shift your perception of the brand, where it was like, well, now this is for money. It's no longer really for us as much. Even if it was always for money, it felt more, being ad-free was a different type of platform.
Well, what I would say regarding the Instagram ad rollout is they did it really well. They kind of did it methodically. They started by changing your platform from a chronological feed to a more curated feed that was out of order on time. And as a result of that, they could embed ads a lot easier. It didn't really seem as out of place on your timeline. Also a platform where much of the I guess follow base for people who are on there is not just friends and social circle. It's businesses, it's celebrities, it's influencers, it's brands. And so again, somewhat seamlessly, ads can fit into that ecosystem. I'm not going to say that they can't pull off something like that on WhatsApp. It's going to feel a little bit less at home. It's going to feel a little bit more out of place on a text messaging app than on a curated picture social media platform. So, which of course has become a lot more than that now. It's almost like a merchandise store in some ways. But I'm not going to discount their ability to pull it off. We'll see what it looks like. Your point around it being a little bit more international, I think, is fair and makes sense, right? Especially if you're somewhere like a European country, you go from one to the other. Your cell phone service no longer works if you aren't paying for like some sort of international plan, which can be expensive. Connect to Wi-Fi. WhatsApp makes that a little bit more ubiquitous. So that certainly makes a lot of sense. U.S., we all, subscribe to the cell service. You can go from Illinois to Nebraska. Cell phone still works. So we don't have those same problems.
We don't. Yeah, I have never felt a need to utilize WhatsApp as much as when I was in Greece, and then it's like it's the preferred communication of everyone else.
I would say one more thing too, and this is kind of bringing me back to maybe the college time frame, but the group chat sort of rolled out around that time, and whether it was, I believe Microsoft owns it, the platform GroupMe or WhatsApp, which of course was a popular platform even back then. Really, Apple through iMessage has improved its own functionality that those services aren't necessary to maintain those group chats, at least in the U.S. anymore. So, it does seem like a lot of those have transitioned to
Thank God. I needed no more platforms that had like group messages. That was too much for me to already keep track. I'm the worst communicator when it comes to text messaging. So yeah, I appreciate now that your group chat has ways you can like mute it, you can like react without having to write a full message. Big fan of those updates, to give Apple some credit there. Next name today, though, is CoreWeave. CoreWeave has been all over the place as of late. B of A today downgrading shares to neutral from buy. Price target was raised, though, more than doubled to 185 from 76. Following the fact the stock has risen 145% following its first quarter results. They do believe the near-term upside has been priced in, but they did raise their price target to acknowledge there are still major positive developments, including a new hyperscaler customer, the expansion of their OpenAI agreement, and a debt raise at a lower cost of capital. If you can recall also, we saw a minor pullback in shares on Friday as NVIDIA disclosed upping its stake in CoreWeave. Well, they also did say for Applied Digital, they were actually eliminating that stake. So we saw an update as far as their holdings and other companies that have sizable exposure like NVIDIA to CoreWeave.
Yeah, they locked up that leasing agreement too with Applied Digital, which I think is important. In the NVIDIA partnership network, though, is a really, really good place to be if you're within this AI world right now. And another example of a successful public offering, the stock has been a monster over the last few months. So something to continue to monitor, and it's definitely in that growth cohort amongst the AI names. Talk Cisco, that's the next one here on our list. And, this name, I think, is surprisingly strong, all things considered. 43% to the upside over the last 12 months. You look at, the last 6 months, 11.5%. You compare that to the S&P 500. It's outperforming both by a wide margin. S&P 500 over the last 12 months is 11%. Last 6 months, it's still down. So Cisco, certainly an outperformer. Maybe not one that we always think of when we think of growth and AI and tech. Maybe we should.
I know, maybe we should. Maybe there's a reason that this name has consistently been able to please the sell side, as we did get two positive notes today. We'll start off with maybe the more optimistic of the two. That's from Deutsche Bank, upgrading shares to buy from hold while also raising their price target to 73 a share from 65. And they went on to say they see improved visibility towards this durable mid-single-digit growth in upcoming years. Well, they do see tailwinds from naturally all things AI, as well as a campus portfolio refresh and more favorable, right now, competitive dynamics in all things AI, as well as the improved scale they believe in security. So we also saw a note out of Goldman Sachs raising its price target on Cisco to 67 from 63. I mean, both names or both targets do imply upside, but with a more neutral rating, saying they announced this enterprise-oriented networking solution, which they do believe should strengthen now its longer-term position with, again, campus networking and the opportunities to really boost their Wi-Fi 7 and AI-driven upgrades. But they also did say that while these new solutions should better position a name like Cisco, they also do think these products may take time to ramp as well as gain that key customer adoption. So for that reason, I mean, a bit more neutral from Goldman today, but Deutsche Bank is really saying this is a company that can really continue to navigate well as far as BetMGM, which of course is co-owned by MGM Resorts as well as Entain, did say on Monday that they now expect net revenue to be at least $2.6 billion this year, up from the prior range, which was around $2.4 to $2.5 billion. But this increase was fueled by the growth we've seen in iGaming and their online sports sector. So it is about time. I mean, we talk about DraftKings, we talk about FanDuel, we talk about so many of these players in the space and the way with expected continued legality, it should only be a growth engine for all these companies. All of them have been kind of disappointing as of late. So I guess nice to see some guidance that is raised to hopefully reflect some upside.
Yeah, I think it's important to separate out the, kind of online-only providers, which really is DraftKings at this point, just because Flutter, which is the parent company of FanDuel, does have, Betfair and some of the things in Europe that I believe are still perhaps a little bit of brick and mortar exposed. MGM, Caesars, Wynn, I mean, these are hospitality companies as much as they are online sports gaming and casino platforms. So they need tourism. They need, to go to the Las Vegas Strip and their other properties and not only, gamble at them, but go to the restaurants, go to the nightclubs, etc. So kind of a reflection of, maybe that downbeat sentiment around travel outside of maybe the cruise ships.
That is true. And yeah, travel sentiment right now has been a bit mixed. I feel like maybe perhaps some of the fears are overblown, but never a bad place, I guess, to be a bit cautious. Then we end up surprising to the upside. That's not a bad place to be, again, for so many of these stocks. But we will leave it there for the top of our show. Now, coming up next, it's time to chart and trade two names on the move today for their own set of news. We're looking at Roku as well as AMD. We'll be diving into the technicals coming up next.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time to look at the charts and two names that are very much always on our radar, but especially today, AMD as well as Roku with our chart master. I have to say, I've been calling Ben Watson our OG chart master, but you are truly our OG chart master, Rick Ducat, back after some vacation time. So Rick, walk us through the chart here of AMD. We are in a really nice move today, which is only strengthened on the session. So tell us about the latest in this chart.
Yes, after a lengthy downward slide in AMD that followed mostly the boundaries of this channel between our two blue dashed lines here, you can see that we bottomed out here, 76.48, and then we started to turn around. You can see that we have risen above two of our moving averages, yellow 21-day and orange 63-day. Now today, after a brief stop at our purple 252-day, we are crossing above that key technical benchmark here. We can also see our green line, the 127 level, represents a high point that we saw after a small gap down and then a subsequent further resistance point that price failed to exceed once again. So now today's large green candle that is still near the highs of the day is crossing above this resistance line. So that 125 level now becomes a supportive area to keep an eye on. If price does start to slow down, this will be one of the first lines that many traders likely will have their eye on to watch for a retracement or if this breakout should fail here. When we look at RSI, not really cooperating as well as the bullish crowd might hope here. You can see that we have this downward sloping red trend line here on our RSI study, and it is coming close to invalidating it here, but not really quite there yet. The next step from there would be to cross into the overbought area. Normally you would want RSI to make new highs in tandem with price here, so not quite exactly the ideal situation here, but price seems to be hanging on for now.
Okay, so price hanging on for now, but as far as bigger term trends, we know it's no surprise to anyone. This has been the story of the unwind of all things strength that really we saw at the beginning of 24 that has really not been able to try to recapture that upside ever since. So what else are you seeing here, bigger picture, longer term for AMD?
So we've bottomed out for now, perhaps it seems like, and we've formed rather large volume node areas here. According to our volume profile study, really quite a lot going on between 110 and 125 or so. The emphasis is on our point of control here, this thick red line on our volume profile that connotates the area of heaviest trading of all. It also lines up with the series of old lows and then subsequent highs there at our light green line, as well as our yellow 21-day EMA. So that level near 115 really stands out as a potential support point that traders may be on the lookout for. Then to the upside, we can see 132, our red line here, matches up with where we bottomed out for the most part in terms of closing prices. Not exactly there, but that was a subsequent low point there, and then resistance once again. So around 132, another key level to watch.
Okay, so a lot to look at here with AMD, but definitely an applaudable move today. We are up almost 10% on the session. All this now in mind, though, as we look to trade this name for example purposes. Alex, lean into this sort of, obviously nice day today, but also the consideration that there is always risk with AMD. We see a lot of failed rallies and failed breakouts.
Yeah, we talked about this concept of show me and prove it last week. I think AMD's found itself in that camp for many investors. So I looked at a neutral to bullish strategy. Maybe it is proving it, but maybe you want a little bit more evidence. Rick talked about that big pocket of volume between about 110 and 125. Perhaps that would act as support if the stock did pull back a little bit. So what I looked at was a short put vertical going out to the July monthly cycle and looking at the 120, 115. What you'll actually notice is throughout our program, we're going to have 3 example trades, all of which the same strategy, all of which the same expiration, and all of which the same risk profile when it comes to
Market retesting the trend. Let's see if we finally break it here or reject again.
3 different stocks. So $1.25 credit means you can make 125 bucks. Max loss 375. 118.75 is the break even in this case. It's a 3-to-1 risk reward ratio, neutral to bullish, Jenny. So you don't need more upside, but it never hurts.
Yeah, I mean, that's also a great point there is, of course, you know, that further upside for those that are long AMD or at least trying to see some more upward conviction, would definitely not be mad about. But now to look at Roku. Roku, the resiliency of this business model continues to impress even me, although I guess I have a very Roku-friendly household, so I'm part of the loyalty to this name. Also with an 8% move today. I mean, these are not small companies. These are pretty massive moves for both AMD and Roku.
Yes, and this one looks perhaps a bit less encouraging than our last chart here. The reason I say that is even though we have a shape that has some similarities to AMD, we had a decline. We bottomed out around the same time that tariff news cycle that initially shook markets. Now we're traveling upward within this channel type shape here. We crossed above our moving averages. The faster ones are starting to outpace the slower ones. But so far, our old highs here, this red dashed line, 82.34, price has really not made a convincing push above that level that has stuck. We did make some intraday highs beyond that point. That gives us the upper boundary of this channel to keep an eye on now. But we really didn't make it where the bulls probably hoped they would see price settle down above that level near 82.83. We can see as well RSI had a rather large interruption here. We have fallen out of the overbought area and recovered fairly close to our green trend line, so there is still something of an uptrend in play here. We'll have to see if price can get its footing here and hold on above this key level.
Okay, so again, when we zoom out and we watch for more of the longer term trend in Roku here, what else are you keeping on your radar? Because we also have pulled back pretty considerably from all-time highs.
Yeah, for sure. So we can see that the most of the volume is in this general area here, 70 to 80 or so. That's a pretty big range, not super helpful in terms of specific price levels, but there is one point that does stand out, the point of control right here, 76.50 or so, lines up pretty closely with our solid blue line here, which is our linear regression line, our line of best fits. So that's another supportive confluence that traders could look out for, that area near 76, 77 or so. But more importantly, we have moved out of this heavy volume area here. We're starting to get into the more thinly traded areas here, so we could see faster moving prices if we break beyond this point. When we do look at a quick view of our longer term chart here, it really illustrates what Jenny was saying about how far the stock has fallen from those highs here. But notice, you know, the heavy volume area is all the way down here, 62 or so on our long-term chart. We have a repeated resistance area near 109. So that's another upside area that traders may be keeping an eye on.
Okay, so a lot to like here, and of course a lot to be still maybe cautious about because, again, the fall from grace in Roku has been notable and definitely puts even today's move in context as it's hardly even a blip on that longer-term chart. But all that to be said, appreciate it, Rick Ducat, our chart master, and of course a welcome back from us. And now as we look to trade Roku for example purposes only, Alex, walk us through your thinking.
Yeah, a lot of the same things apply, right? Maybe a prove it story, maybe a show me story when you see that longer term chart, but also above that pocket of volume between about 70 and 80 that Rick talked about. Above that 76, 77 point of control, as Rick talked about. Both of those could act as a bit of a bolster of support if this stock does lose some ground. And as promised, very similar strategy. July expiration, 75.70 short put vertical, $1.25 credit, creating a 3-to-1 risk reward in which the trader can make 125, risks 375, and the break even 73.75 is below that point of control. It's in the lower part of that volume pocket. And again, it's neutral to bullish. It would like to see the stock at the very least stabilize, but it'll always welcome more upside as well if it is finally making some sort of significant comeback.
That is very true. And of course, yeah, we'll have to see if any significance to this comeback will start to hold, but not too bad starting things off for this week, up over 8% for Roku shares. We will leave it there, though, for Chartmaster. Now, coming up next, it's time for FOMO, and we are talking all things IBM. IBM today with another new all-time high. We've pulled back a bit ever since hitting that high earlier today, but analyst favorability, lots of upside to be had, and this increased focus on quantum and their reach into that world. We'll discuss more coming up next.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes,
See
insurance,
market
and
pushing the
estate planning,
trend
all with
here.
low fees.
Still holding my position at 60.9825, so down about 5 points, 4.5.
Schwab, a modern approach to wealth management.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time to talk IBM, and today, of course, the FOMO move is to the upside as we did touch all-time highs earlier today. I'm now joined by Marley Caden, a contributor here on the network, to discuss really more of what is driving all this optimism. I know there's a lot of quantum computing excitement, but there's also the analyst community that gets more and more favorable on a name that is still shocking to me that we're this excited about IBM, but here we are.
Well,
Position going green now, break even currently. We're green.
Firms in the world. So, and one of the oldest tech companies in the world. You mentioned the price target increase, so we should talk about that. Evercore ISI raised the firm's target on IBM to 315. That's a street high now from 275. They kept their outperform rating on
Still targeting 6105 as my main PT profit.
We're trading up about 1.8% at 282.27. Like you said, we did touch that all-time high of 284.50 earlier today, but still trading pretty close to that number. The Evercore ISI
But
analyst
let's see
thinks
if this
IBM
break
can
holds.
sustain mid to high single-digit sales growth and double-digit EPS and free cash flow growth over the next several years, and they think this has them trending towards a $16 to $18 EPS power over the next 3 years. And just for some reference, most recently their EPS was $1.60 a share. So this is what we're looking at here. Also, you did make mention of that quantum computer. IBM announced or revealed, I guess, to the world that they are going to build the first large-scale quantum computer. They say they solved one of the major technical problems with quantum computing. They've gotten around that error code that most of these companies trying to do it, and they've figured it out. They have not released the data for peer review, so people don't know exactly what their workaround is, but they are saying by 2029 that the IBM Quantum Starling, that's what they're calling it, will be built, and they're building it in Poughkeepsie, New York, expected to perform 20,000 times more operations than today's current quantum computers. So lots of excitement around one of the oldest tech companies in the industry.
So this is next-gen investing.
Yes.
We spend time talking about forward-looking companies and exciting tech names. We spent, for context, we spent a lot of time on Palantir and Tesla and NVIDIA. IBM, particularly for this segment, is not what comes to mind, but maybe it should for the reasons that you're talking about. But I can't get over my memory of like 22 straight revenue declining quarters. I think that was in like 2017. So it's as if IBM has turned the page on that really kind of, I guess, disappointing period in the 2010s. And perhaps we shouldn't be surprised with all this Watson investment over the years that when we finally are on this AI, quantum computing, that IBM's right there.
IBM is there.
Up 2 points here on my trade. Let's bring it up.
They're not newer. They don't have a lot of positive headline-making news of late. Like you mentioned, they had a lot of misses. And their price target right now, they have their high, I mentioned, that 315. Their average is about 250.91. So from where they're trading right now at just a little over $282, that implies about 11% downside. Their average is 250.91. So like you said, Alex, a lot of people not having big expectations for IBM here. Their low price target still 170. So analysts still very mixed here, feeling kind of how you feel. Do they belong in a next-gen show? But if they really do
Getting smacked right back.
they've really solved that workaround, that networking error that seems to be the issue that every company in this race is trying to do, there are some positive points. Their last quarter, others withstanding, they did have strong revenue growth. They had profitability, they had cash flow generation, and they did exceed expectations. So it was a better quarter than usual for them. But consulting revenue was flat, and there seems to be a lot of concern about that.
Okay, so with some of these concerns, I mean, is there any reason to say like this narrative could be challenged? Like, what are right now some of these still persistent headwinds that IBM is facing? Because I tend to look at things not from a skeptical view, but just to be more realistic. Like, hey, with all this upside and with the outperformance from that chart we just saw, especially long term, what is now the risk?
So the major risk, consulting revenue, that seems to be the one everybody's very worried about. It was flat in the current quarter, and their federal consulting business, which is, I should tell you, 10% of their total consulting, could be susceptible to some discretionary pullback. So that's another concern analysts are mentioning. Also cautious about contributions given the current economic conditions for consulting. Infrastructure revenue, also a potential issue here. It declined by 4%. IBM Z down 14%. But they are releasing their new IBM Z17 mainframe that has a lot of AI capabilities. So a possible concern there, but there is some possible, and obviously, of course, macroeconomic environment remains uncertain. We don't know about client buying behavior, and of course, those consultant services a big issue here.
I think you bring up a good point, too, which is the sprawling nature of these businesses. These really successful companies of the 80s, the 90s, the early 2000s have just grown into these giant conglomerates. And you think of a company that's very different, that was once the Apple of the market, was GE. And it was struggling until it decided, hey, let's focus in, let's separate the businesses out, and it actually allowed it to breathe a little bit. So perhaps something down the line like that for IBM could make sense, or this new growth sector with quantum and AI will just help grow it out of its troubles elsewhere. But what do they say in sports? Ball don't lie. And I guess in finance we can say the chart don't lie because it's at all-time highs. That's pretty impressive.
Yeah, their chart is not lying, and their generative AI business saw significant traction in this last quarter. Their book business is now over $6 billion. They were up $1 billion on the quarter. So really, like we're seeing in all of the names that you're usually talking about on the show, huge drive into AI. And for IBM, it's getting their name back in the conversation.
You know, it really is. And it's been, I know, like we say, they're not like a next-gen stock, but as much as we talk about them, I guess they
are today.
Yeah, they've proven themselves to definitely have a seat at the table. So I really appreciate that and really great insight onto IBM. And so now as we look to now trade, of course, IBM here, we pulled back, 0.8% from highs. We've pretty much been at that level for a while now. So how do you think about trading this name for example purposes?
Well, as promised, it's going to be the same strategy. We looked at the others with the same kind of risk-reward metrics, but it can still work even with the stock at all-time highs. So clearly the technical trend is to the upside. It's got nice momentum. But I looked at a short put verticals. I do think some of those same conversations about proving it and showing the market apply here to IBM. So neutral to bullish, going with the trend, but wanting to give it a little bit of cushion in the event that it does have setbacks or lacks additional push here to the upside. $1.25 credit for the July 275, 270 put vertical. You can make $125, Jenny, on $375 in risk. The break even is $273.75. So if we were to compare that to the current share price of $282, you got, let's call it 3-4% of cushion to the downside on this one. But three very different stocks, same exact strategy, can work for all three.
Okay, yeah, so I think I like the way that we did those example trades today. Of course, different ways to look at very similar but different types of worlds right now. So great a way to break those down. Appreciate it, Marley. Appreciate it, of course, from Alex. And we'll leave it there now for FOMO. But coming up next, time to talk another name where we're seeing some favorability from the sell side today. Rosenblatt stays bullish on Coinbase. We'll look at Coinbase as well as some of the other equities exposed to the recent surge in Bitcoin's price coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis.
Let's see if it holds here. All we're seeing is a breakout and trend retest. So ideally, I want to see price hold at or above 60.97 for a push or continuation up to that 61.05 target. On the upside, if we do reject, aim for the current trend lows, which is at around, if you're looking at ES, that's at around 60.87. Potential drop into 60.85, and then we have 60.77 mark if we're looking at downside. But let's see if we hold here and continue to the upside. Still holding my long position.
In platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Welcome back to Next Gen Investing. It's now time to discuss Coinbase. As we are seeing actually right now, Bitcoin futures up about 2.7% as Bitcoin has pulled back from highs. But I mean, hanging out around 108,000, it's not too bad of levels for even a name like Coinbase, which got some Rosenblatt optimism today. Joining us to tell us more about this note is Diane King Hall, of course, the host of Morning Movers. Diane, walk us through the latest with Coinbase. I do tend to very closely link this to Bitcoin and Ethereum as well, but both names have been on a pretty nice tear, and Coinbase, a chart that looks pretty strong this year.
Yeah, look, and shares up more than 6% right now. Essentially, Rosenblatt reiterating its bullish viewpoint when it comes to Coinbase. They've got a buy rating. They've got a $300 price target on Coinbase, and they just think they're bullish on both the industry and how Coinbase would benefit from it. They think that crypto's growth trajectory is still in front of it. There's still growth to come. They believe that the rally that we're seeing is still in early innings, and that's fascinating to hear, especially given, like Jenny, you just mentioned, the price of Bitcoin at around 108,000 today, although, again, not the high that we've seen, but the fact that they see more potential for room to run, and similarly for Coinbase. They are citing a favorable political landscape when it comes to Coinbase. And they also see that Coinbase is broadening its reach beyond just trading into areas like payments and lending, which that was highlighted. And this is where they're, kind of both reiterating and reaffirming their view on being bullish, the third annual State of Crypto Summit. So they expect that reduced regulatory pressure will help Coinbase in terms of it accelerating its diversification of what it offers. Now, they did point out some near-term weakness that the second quarter trading volume has been more subdued. So they, kind of trim near-term earnings forecast. But overall, they still see a buying opportunity here. So you see shares of Coinbase rallying more than 6%, as you mentioned. It's up year to date. The big move today is what essentially helps it be higher year to date and higher on a year-over-year basis. Now, there are some who say that, if you really want the exposure to crypto, you just buy the Bitcoin itself. But again, you can't ignore the move today in Coinbase.
Yeah, and I think that's an interesting point, especially given this backdrop in recent years of more ways to do that, whether it's the introduction of Bitcoin and Ethereum futures, whether that's some of the exchange-traded products, or just the ease of use of actually going to a place like Coinbase that offers spot trading is a little bit, more accessible now than it had been maybe, a decade ago. All that being said, though, I do think this is comparable for a conversation of industries that are maybe a little bit more mature, that are a little bit more understood, like the energy sector, like gold, where you have the miners in gold that, they do well when gold's really doing well. Or you have the energy companies, they do well when, crude oil is going really well. But when I look at Coinbase, does it need more than just Bitcoin to get attention? Does it need some of these other coins or Ethereum and other things to get excitement as well? Because, like I said, you can go to other ways to get exposure to Bitcoin. Maybe it's more of those second, third, level coins that Coinbase is really bringing to the market.
Like the stable coins and whatnot. Well, you make a good point, Alex. And then when you think about how analysts view this one, they are, essentially neutral to bullish. It's pretty split down the middle how analysts view Coinbase. And part of that is the point that you make about, what investors are gaining exposure to. Yes, it's a cryptocurrency trading platform. But then if people just want exposure to crypto, there are just more options today. Even if you think about the recent IPO for Circle, that showing, that just overall bullish sentiment for crypto. That stock up another 20% today and had a strong debut as well on its debut to the public market. So that is the question is, can investors still get their exposure elsewhere? And one of the things that those in the crypto space say that Ethereum still has yet to catch up and to make good on that story on this is the second. It reminds me of the story of NVIDIA versus AMD. I know AMD has been higher today, NVIDIA too as well. But when is that point when Ethereum becomes this certifiable second strong second contender to Bitcoin. And, you know, does a Coinbase give you that exposure? I mean, at least for today, you have some bullish sentiment around Coinbase, Alex.
You definitely do, and I think that, I mean, seeing some favorability that matches also the move in Bitcoin, not necessarily a huge correlation as of late, but I mean, I still very closely link the two, especially Coinbase is top of mind when I think about like expanded regulatory frameworks, expanded, I mean, like legal right now ramifications that the entire Bitcoin world is trying to somewhat revise. So I do think there's a very close link between the two, but appreciate it as always for the wonderful insight. That is Diane King Hall, the host of Morning Movers. Now, coming up next, it's time for Under 30. We are talking all things Celsius today, making a nice move, adding to the fact that it's up now over 60% on the year, remaining down actually on a 12-month basis. So we'll dive into all of the volatility that right now is facing this highly caffeinated market coming up next.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
I'm Nicole Petalides, host of Trading
And
360
market
and watch
right
us live
back
on the
to
floor of the New York
VWAP. So
Stock
let's see
Exchange, where
whether or
we bring
not
you
this
breaking
holds.
news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Starting to see a slowdown on Apple, and then you see Microsoft here
Whether you're
struggling
a
to
bull or
hold
bear,
those
you'll want to catch the
highs.
latest market action on
Fairly
Morning
similar
Movers
with
with
Amazon.
me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Year Investing. It's time for Under 30. Today we are going to the energy drink space. So for those who are a little bit tired, maybe looking for that caffeine kick, perhaps they would consider a Celsius. That's going to be the topic of discussion. Joining us now, George Tillis, Senior Markets Correspondent for the Schwab Network. George, to balance it out, I do must say, last name's Coffee. I obviously drink coffee myself, but I see the appeal of the Celsius, especially given, I got to say this, and I want your thoughts too, but it seems Celsius was able to do what Monster and Red Bull before it weren't, which was expand this beyond like action sports. And it really catered towards this health demographic. And I think it expanded the marketplace for all the players.
It did. And I think that's, first and foremost, the unique feature of Celsius versus some of those traditional energy drink manufacturers like Monster or essentially others out there, or Red Bull, for instance. This is more of a functional, drink. In other words, a lifestyle drink. They more calorie conscious, but also more health conscious. That was really the appealing component of the underlying business. The stock has been down significantly over the last year, but it's still up. I looked at the 5-year chart, over 1,300%. And, there were some structural things going on with the business in the last year that might be turning around. And, a few of those things were some of the competitive elements behind, merchandising the product, but also manufacturing the product. So they structured a deal with Coca-Cola. It was a revenue sharing deal with them, so that they basically have a large scale bottling company and production company that Celsius can certainly use to bottle and distribute their products. But at the same time, they started going through an acquisition spree because of competition from Monster and companies like Red Bull. They bought Ali Nu, which is basically a female, structured, orientated, functional wellness drink brand at over $1 billion. That deal actually closed in April of this year, so not too long ago. And I think that was weighing on the margins for Celsius altogether in the last year. But if you look at the last, couple of quarters, starting out in February, the stock actually didn't really participate in the downtrend with the market in February to April. It was actually moving higher. So I think that's very telling that potentially going forward, there's some more promising margin expansion in the business. And I think this is why TD Cowen upgraded the stock to buy from hold. And they actually see improving margins on a forward basis, and they are based on consensus estimates for all the analysts that cover the stock. 81 cents this year, $1.17 next year. Still trading at around 51 times this year's earnings, but 35 times next year's earnings, with improving EBITDA growth, which was actually down last year, as well as top-line sales. Sales were down about 10% last year. Earnings were down 22%. Both those numbers are expected to turn around in the next 4 quarters, about 25 and 22% respectively, both in sales and earnings. So I think this is an interesting potential position the stock is in, because it's moving away from the market. I know the market's been higher since April. Celsius has too, but it started actually moving higher in February when the market started to roll over. So a lot of times that's very telling. They don't have any debt to speak of, about 20 million. So I'm going to call it, pretty much near zero, compared to 10 billion in market cap, 970 million in cash. So balance sheet looks relatively healthy with a potential increase in sales and earnings going forward.
So, George, as far as also some near-term turbulence we can expect, I know that steel and aluminum has been a concern, but their distribution is partially offset by, I believe it's PepsiCo. So do they have any near-term distribution concerns? Because I know that that's been mentioned by like a Monster and Coca-Cola, and also the fact that there's expected to be a degree of volatility with the price of steel and aluminum. Are those factors at all weighing on the Celsius narrative right now? Because you'd hardly know it from looking at the most recent chart.
Yeah, so like I said, you're right. Most recently, like I said, if you go back to the earnings in February, it started gapping higher, it did pull back, and it's made a nice continuation. It seems to be, and I'm just letting you know, I can't show you the chart of the earnings graph or earnings profile. It's improving. So that's what you want to see. You want to see price improving alongside the estimates, which are improving for earnings. That's the case. So for what it's worth, they seem to be structurally improving their bottom line efficiencies. There is, quite a degree of competition. Weaker market share is a problem for Celsius. But as long as they continue to reinvent their brands, market their brands very well, these are the kinds of stocks that can make some powerful trend reversals. I'm not saying this is, buy here, but I think it's very telling that the stock has been moving higher since February. And it does match the earnings trends. It also matches improving EBITDA estimates as well as revenue estimates. And a lot of times an acquisition takes time to manifest. And like I said, If you just look at the news, they did close the acquisition of LNU going back to April of this year. So, that may end up being accretive to earnings going forward, and maybe that's what the market is telling us, as well as maybe these analysts, which are now bullish on the stock like TD Cowen as well.
George, super quick. I mean, 11.3 billion market cap, I think it is. It's obviously buying companies itself. Down the line, assuming it doesn't grow too big, is this a Coca-Cola target? Is this a Pepsi target just to break into a really, really important space with these caffeinated drinks alternative to coffee?
Yeah, I honestly think there's a possibility. I'm not suggesting that, to buy it to hope for that. You don't want to hope for anything because it doesn't work out for you. It doesn't work out. But just the market capitalization, relatively low. I always thought about that for Monster as well. For many years, they still are independent. So it's a possibility. But again, I can't say it's going to happen for sure. But they are marketing a brand that's become extremely popular, and that's extremely powerful, and that becomes attractive for maybe an acquirer who's looking for inorganic growth like Coca-Cola or Pepsi.
Yeah, that's a good point, too. And I think that Celsius has been a very interesting newcomer to the market, the way it's been able to challenge some of these big legacy brands. But we'll leave it there as we're out of time. Appreciate it. George Tillis, of course, contributor for the network. That'll do it for Alex and myself. For Next Gen Investing, we have the watch list coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Opportunities don't stop when the market day ends, so neither do we.
New lower low on this current trend. So we did get the break of trend, tried to retest and hold, but it didn't hold. Now we'll see if it makes a new low, if we wipe out today's gains or not. Still at about 50% of today's morning move.
You can trade brilliantly with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the floor of the New York Stock Exchange. So glad you're with us, and we're really around the highest points that we've been since the fall, down to 48.35. I think our high point prior to that, just about last week, was 60.59. So we got close to that today. We have a big show for you. We'll cover the future of copyright laws. The debate over training AI models heats up following a lawsuit from Disney and Universal. We'll have Ted Weisberg with us, who will give us his glimpse at the big picture. And tech and the economy and energy are all on our docket. In the meantime, we're taking a look here at markets that are moving higher across the board. The S&P right now at 60.29, up more than 0.75%. The Nasdaq 100 up 1.3%. The Dow up 0.75%. And the Russell, those small caps, also gaining. Oil and gold both lower. Oil's at 71.58, down, right? It had been lower than where it is right now, but had been up to about $77. So it's at 71.60 now. 3,413 is where gold is today, down $40, but that's been something people have been looking to as a safe haven, of course. And the 10-year bond yield behaving at 444, and the Bitcoin trade 108,000. That's up 2.5%. Kevin Hanks is with me, host of Fast Market here on Schwab Network. And I was saying, look, we have a lot to look forward to this week, a lot of points, including Fed Day. Tell me a little bit about your thoughts.
You know, I think this is a trading week that has something for everybody, Nicole. Doesn't have a lot of earnings. We'll get some out on Friday with CarMax and Darden Restaurants and Kroger. Besides that, not a lot of earning economic data. We'll get retail sales tomorrow morning. That'll be a big one. Then we go into Wednesday with the Fed decision. That'll be enormous because of the SEP that we're going to get. So that'll give us a much better picture, much better look at how the Fed sees the overall economy. And then we'll get Jerome Powell's comments and see how he decides. So I think we'll get a lot of information this week about the overall market. But you mentioned to start your show how the headlines today, a little bit of de-escalation. You know, it's interesting. Crude oil's down right now about 1.9%, but it was down a lot more than that. It's come up almost $2 off its lows this morning, but gold is lower. The VIX is lower. A lot of these risk-off assets are lower than they were on Friday. So a little bit of de-escalation in some of the tensions here seem to be driving the market and allowing it to go higher. Now, that doesn't mean it's going to stay there. As you know, Nicole, headlines can move this market very quickly, but we've got data tomorrow. A look at the U.S. consumer. We've got a Fed meeting. We've got Thursday off, so the jobless claims will be on Wednesday, not Thursday. And then, like I said, this is a headline-driven market. The G7's happening. We'll see if there's trade deals to be talked about from there. So headlines, 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 Nicole, as always.
Yeah, a quick look at Cisco getting an upgrade over at Deutsche Bank.
Deutsche Bank upgraded Cisco from to buy from hold, price target $73. This company that languished for many years is up about 43% in the last 12 months due to AI, and its acquisition of Splunk has rejuvenated some growth in this name. Gets a nice upgrade from Deutsche Bank, Nicole.
Yeah, indeed. All right, Kevin Hanks, great to see you. Thank you so much. Appreciate it, Kevin, there live at the CBOE. Now let's take a look at the bigger picture. Joining me right here, Ted Weisberg, founder, president of Seaport Securities. Thank you for being with me. What a few days, Ted. I mean, and even today, I've gotten reports saying that Iran would like to talk now. Then I saw another report that said Iran has warned Tel Aviv to evacuate. You know, it's sort of hard to know where the clarity is when it comes to this story. In the meantime, what do you think? I mean, they sold them off on Friday pretty good.
Well, yeah, Friday, they, you know, you had a lot of people moving to the sidelines. And any trader worth his salt wasn't going to go home long over the weekend because we didn't know what to expect. Listen, we live in very unsettled times, and the geopolitical problems coming out of the Middle East are huge. But you know, today's action just reinforces what we have been talking about on and off, Nicole, for many months now, is that given even the sniff of any good news, and the market, quite frankly, wants to move higher. I think the lines for the overall market are higher, not lower. Clearly, there could be a black swan event. Things could completely deteriorate in the Middle East, and all bets are off, of course, if that were to happen.
Right.
But all things being relatively equal, a little good news, I think we see the markets in general move higher, and the sector that is clearly outperforming once again is the tech sector.
Yeah, let's talk about tech.
And the market
Do you
needs
like
that.
tech? You still like tech? I mean, can you not like it?
I've been fighting the tape for a couple of years with tech, other than our favorite Meta, and then we picked up a few more like Oracle along the way. And now I'm even after watching the stock for 2 years. Now I'm kind of looking at NVIDIA, and I'm thinking, well, you know what? Maybe we got to add NVIDIA to the list. But I am clearly late. I am clearly late to the NVIDIA party. But tech is where the momentum is, and the market needs overall. I think the market needs tech to do well, and clearly today, for example, it's doing quite well.
So let's talk about some of the names that you like today, that you have on your wish list or on your the pickings.
Yeah. Well, my first choice is still short-term treasuries, because I'm uncomfortable with all the potential volatility. I am a buy and hold investor.
Right.
I think the volatility, quite frankly, creates some potential opportunities, because we always have a shopping list for names we want to do. So my first trade is still short-term treasuries, 3 months, 6 months. I'm just looking for a place to hide till hopefully the dust settles. But beyond that, if for those that really want to continue to play, and there are plenty of people that are looking for ideas, we've talked about the tech names. It's still Meta. It's still Oracle. I mean, Oracle had great numbers last week. The stock
really
had a
impressive, right?
huge move. And I mentioned NVIDIA. I mean, these are all names that we own or our clients own. But then it's the same group. It's insurance and it's Chubb. But I've also kind of added, and we talked about it, infrastructure. Because with all this, sadly, death and destruction around the world, whether it's the Middle East, Ukraine, I mean, pick your poison, this stuff has got to get rebuilt at some point. And this is going to be huge revenue for the infrastructure plays. Now, we look at Floor, but clearly there are others. And how about defense? We've never talked about...
Yeah, you don't really talk about it. And I saw you have General Dynamics and Northrop Grumman on there.
Well, there's
so
Norfolk,
you like some of those.
Right, and General Dynamics. There's a great Israeli company called Elbit. The symbol is ESLT. It's an expensive stock. That's the company in Israel that's developing all these crazy weapons that they're using. Trump has said to the EU, you have to basically develop your own defense stance, and they don't really have. There's not a lot of companies in Europe that are making these products. So basically, they're just going to come to the U.S. So it's Lockheed, it's Norfolk Grumman, it's Mark Marietta. There's plenty of names. Raytheon, another one, RTX. And lastly, if I can, and this is a...
Sure, Ted, why not?
It's kind of a Hail Mary trade, but it's been a trade that I have mentioned before, and that's the airlines, and in particular, United.
And why?
They had some negative news recently because the bookings are down for March or something because of, some of the issues, but that's all old news. I mean, I would have to think that's all priced in. But I think, at least in the case of United and perhaps Delta, maybe not so much American, that I think the airlines have finally figured out how to nickel dime the public to death. And they have figured out more ways to make money. And yes, we're told that the bookings are down. American Express told us that, and we've seen that from some of the research houses, that they had a soft March, maybe a soft February. But as you know, I'm on planes all the time.
Right.
Every plane I'm on is full, and the airports are overflowing with people. So I don't know where the numbers are coming from.
Yeah, I mean, it does seem like these bookings are real and booked out and full, and people are there, and nothing's cheap.
No, And listen, I understand everybody hates the airlines. I hate the airlines.
No,
It's
you
the
don't.
It's the worst.
I know what you mean.
It's the worst business in the world. But I think United, the stock that we own, I think United is an interesting trade.
Right.
And I mean, you have the issue of energy, the cost of fuel, which is their biggest expense item. But fuel, prior to what we're dealing with now in the Middle East, have been selling in the low 60s. I mean, that's a big plus for the airlines. And if things can get resolved in the Middle East relatively soon, the price of fuel is probably going to go back down again to the low 60s. And that's a big plus for the airlines. So I just think it's an interesting trade. It's not telephone, you know, and it's not Meta and it's not NVIDIA, but it is an interesting trade. And I think United in the low 70s is probably worth a shot.
Okay. So that also looking at the levels there. What about what the Fed may or may not do the rest of the year? We have a meeting this week, and then the rest of the year. What do you think? You think the Fed will cut this year even?
I think the Fed always seems to be between a rock and a hard place, because no matter what they do, they're going to be wrong. You know, because clearly the White House wants interest rates lower, but the economy doesn't seem to want to roll over very fast.
Right.
And so if the economy stays relatively strong and the tariffs in some form or another, you know, create inflationary problems in the U.S., interest rates aren't going down. I think, and this is just me, I think the best case scenario is that they go nowhere. And for selfish reasons, I'm perfectly happy with that, because today at the auction, the 3-month Treasury is yielding 4.35%. There's nothing wrong with that.
Yeah.
I mean, I'll take that all day long.
Right.
I mean, 2 or 3 years ago, we were getting 0 on our money. So, so I, for one, wouldn't mind seeing interest rates stay where they are. I've lived in environments where we've had interest rates at 15, 16, 17%. Somehow life went on, and we've just exited an environment where we had interest rates almost at 0. So I don't know what normal is for interest rates, but I suspect where we currently are is closer to whatever normal is than historically than where we have been for many years in the past.
So maybe the Fed will do nothing. In the meantime, there was talk that President Trump was considering naming the next Fed chair sooner than later, and many people were speculating that it would be Scott Bessent, because by that time next year, right, next spring, summer, the tariff stuff would be settled, and then he could step into that role to run the Fed. What do you think of that? I mean, who do you think he might have named? And he didn't name anybody this week. I guess he's a little distracted. He's also talking to the G7 leaders. He's with the head of Canada, one of the leaders there. So he's got a lot that he's doing.
I think without making a political statement and try to keep politics out of it, I think we live in a world of rhetoric roller coaster. You know, I mean, it's you just don't know what's going to come tomorrow. The Fed is supposed to be independent. You know, I was going to relate it to stocks. You know, sometimes, you know, when you don't know what to do when it comes to stocks, usually the best thing to do is to do nothing. And perhaps that's exactly where the Fed is. When you don't know what to do, just do nothing.
Just do nothing.
Time will play out. They eventually will do the right thing. Will they be behind the curve? Of course, because they're always kind of behind the curve.
The rhetoric roller coaster. I like that.
But I think you know, you just don't know what's going to.
The Fed's supposed to be independent. Well, we are potentially holding these lows again. Let's see. SPY right under VWAP, Q's right above VWAP, IWM right under VWAP, Apple right above it, Microsoft right below it. We'll see.
About the market. Ted Weisberg, founder and president, Seaport Securities. Coming up, Options Corner, and Rick Ducat is standing by. He'll highlight unusual options activity from the day and how investors are looking to trade on recent news of First Solar, Morgan Stanley, and Meta Platforms. Stay with us. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Watch us. Time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. We welcome in Rick Ducat, lead market technician here on Schwab Network, and we have a few names that we're watching very closely. Rick, first up, you have First Solar, where you found a bearish trade that you'll explain to us.
Yeah, so all bearish or neutral to bearish trades today on this, despite it being a green day for the market here. First Solar has certainly generated its share of headlines lately. Lots of uncertainty about domestic energy policies and where solar energy will fit into the mix here. But made a big push to the upside in early May. You can see we have that big gap up on our chart there. Backed off a bit from those highs near 200, and we seem to have found some support near 145 before gradually rising once again here. We did have a Jefferies upgrade on June 11th to a buy, price target of 192, but one trader seems to be doubting the stock's ability to hang on here during this holiday shortened week. Very short-term trade, just expiring at the end of this week here, plus 2,679, June 20th, 175 strike puts at a 775 debit. So about a $2 million debit paid here for this bearish trade here with only 4 days to expire. So really quite risky based on the very limited time horizon here for this one. The break even comes in 167.25. The expected move is all the way to 161 though. So even though in terms of the time duration available, it's quite risky. In terms of the expected move, it's well within that projected potential range there. Now, that certainly doesn't mean it's going to go there or anything like that. Just it's not really that far outside of the realm of possibility for this to happen. If it were to reach that expected move range, the profit would come in at about $2.6 million here for this bearish trade here. This particular trade as well was about 5.5% of the total options market for this name here. The sizzle, 1.5%, shows slightly elevated activity relative to the 5-day moving average of options volume.
All right, thank you for that. Good luck there at First Solar, which right now is down about 2%. That was your bearish trade there. Then we turn our attention over to some of the financial names and looking at Morgan Stanley in particular, where you also found a bearish options trade that you'll share.
Yeah, so for this one, it was a combination of different trades here, and it was kind of unusual. It's kind of like a risk reversal spread where the trader was selling calls in order to finance buying puts. The quantities are extremely uneven, though, for this particular name. And, Morgan Stanley, not a ton of news today here. They've been involved with Elon Musk's XAI artificial intelligence product, for which he's looking to borrow $5 billion here. Goldman Sachs did also have a price target raise on this name to 136. But other than that, the trade itself stands out because it's such a large proportion of the options market here. This trade, with all of its legs put together, was a significant part of the total market here. So we can see now the trading question, plus 9,600, December 17th, 2027, 65 strike puts. Then also plus 8,000 December 17th, 80 strike puts, and at the same time, minus 400 of the 130 calls from that same expiration, at all coming together at a 150, 131 average net debit here. So I know that's quite a mouthful to put together here, but basically selling calls in order to finance buying puts here. And this trade was unusual as well because at the time of this trade, the puts, or the calls in question were actually in the money. So they were selling in the money calls. Total debit paid, $6 million debit. All of these are opening trades today as well. The volume is greater than the open interest for all these particular contracts here. Unlimited potential for our max loss here because there are short calls involved here, but really the losses would be mostly capped until we start to get above that short strike area of 130. If we were to move beyond that point to the downside, that break even of 72.43, the gains would start to accumulate pretty rapidly there. But notice that the shaded area, the expected move, right on top of that break even. So this is a hefty debit paid that would need a bigger than expected move to make any money at all here. I'd be pretty surprised if it was not paired with some other existing stock position or existing options position here. But regardless, this trade was about 72% of the total options volume for Morgan Stanley today. The sizzle is about 3 when I checked here, so 3 times the 5-day average of the options volume typically seen.
Yeah, understood. In the meantime, Goldman Sachs maintained a neutral rating with a 136 target. It's at 131.72 today. Ted Pick, CEO over at Morgan Stanley, said the advisors are underweight alts. They have so much when it comes to alternative investing and products for that, but saying that's what they're doing. All right, so there you have it. It's really had a nice comeback, though, from the lows that we saw some time ago. Let's talk about Meta, which Ted Weisberg has liked since the day it hit Wall Street. He's liked it, and he's done very well with that run. Right now, you're looking at a neutral to bearish trade you found on Meta platforms. Yeah,
the story today for Meta, it sounds like they're going to start including ads on WhatsApp. That's what everyone wants, right? More ads on their apps, yeah, whatever. But also channel subscriptions, promoted channels, etc. here. Oppenheimer maintained their outperform today price target up to $7.75. Meta also invested in Scale AI, another artificial intelligence company. They acquired a 49% stake for about $14.3 billion last week. That's kind of the recent news for this particular company here. But the trading question, this is once again selling short calls. It's selling them at 2 different strikes in the same expiration series. So minus 500 September 19th, 820 strike calls, and minus 2,000 September 19th, 1,000 strike calls at an 1899 net credit here. So this comes in just shy of $1 million credit, $949,000 here, 95 days to expiration, you know, kind of in the middle sort of between our very long-term trade we just talked about and our very short-term trade earlier that expires this week. Once again, opening trades here as well, giving us this rather curiously shaped risk profile where we have 2 kind of legs where the losses would accelerate at varying rates of intensity there. So we can see the actual break even for these 2 trades together, 838.99. That would be about, what would it be? 19.5% to the upside or so. So you can see our shaded area. In this case, the max profit is totally encompassed within that shaded area there. It would take a bigger than expected move for this one to start losing money. But if it were to somehow, if the stock price were to reach that $1,000 level, the losses would get pretty extreme. It would be about $1 million of loss per $1 move in the underlying beyond that point there. We can also see here that the trade in question, more of a high probability one here. That's kind of what we're looking at here. And again, I'd be surprised if it was not paired with some kind of other position here, be it if this were covered calls or some other option strategy. We really don't know. We can only see the trades as they come in here. Interesting to speculate on what might be considered in this example here.
Yeah, understood. Thank you for that. 7:03 today, and as you noted, these ads, they will show ads, offer paid subscriptions. The ads will be a little less targeted than those on Facebook, which use
personal information, for example, and Instagram. These will be more broad and focused on users' locations and some of the channels that you follow within the app. But you're right. That's what we're going to get at Rick Duquesne. Thank you so much. Appreciate it. Coming up, that was Options Corner with Rick Duquesne. Looked at First Solar, Morgan Stanley, and Meta. Coming up, we will cover the role of copyright law in the future of AI as Disney and Universal sue an AI firm for copyright infringement. So we'll talk about that more here on the Watch List next.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track markets with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Watch List. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange, and we welcome in our next guest, Seth Schachner, Managing Director at Strat Americas and Digital Business Executive. Thank you for being with us. So we have something big brewing all about intellectual property. It's copyright infringement and all of this. What's the backstory here quickly, and why does it matter?
Yeah, great to be here, Nicole. You know, it's early stage in AI, and I think the entertainment and media industry in general kind of hasn't gotten its arms around it as a business yet. And what I think a lot of entities are trying to do are seeding the grounds for it to become, a legitimate business. And that's what these lawsuits are about, in my view. They want to try and create the conditions, by which they can ultimately partner, use, and, help these new technologies become part of the ecosystem. So it may look like a lawsuit at first, but I bet it's probably got a more constructive element behind it.
So, alleging that Midjourney stole countless copyrighted works to train its AI engine, how do you prove that? Are we going to see many sort of suits of this kind? Is it sort of detrimental to the progress and growth and actually the monetization of AI?
It's all the above. I mean, what's happening is that, these AI models, even the biggest, like OpenAI and the ones that come out of Microsoft, kind of work B2B and enterprise. They set up platforms and people can build all sorts of apps on top of them, good or bad. And these things need content, IP, not just entertainment content, but content to train their engines on, their language models on, if you will. And, unfortunately in the States and other parts of the world, the copyright law that, folks like you and me who work in media and entertainment would kind of take for granted aren't really established yet around, what's a copyright if a machine makes it, basically. And so there have been these large scale, training that have been happening basically from these AI models on everyone's intellectual property. And it's gotten to the point now, at least with Hollywood, where they're starting to spit out some kind of serious and potentially frightening things for the industry. It could be potentially disruptive. This specific one is an image generator, so you can call up Shrek and it'll spit something out quickly. But there are much more sophisticated video models that are in the works for it as well. And I think the real thing is that if you don't kind of catch this stuff early, and deal with it in a constructive way, not just lawsuits, but allowing your creators, your studios to, experiment with it, it could be pretty destructive down the road. So that's actually what's happening here. And I think this specific suit, I don't think it's called Mid-Journey as a particular. With some execs who are, sales execs here in LA this weekend and are.
Sorry about that. Looks like we're back up and running.
Business development. So yeah, for sure, there are absolutely different uses for it, and it kind of depends on the industry. It's hard to generalize, but for media, I mean, I'm a pretty strong believer that you got to figure out a way to at least license it. But I think the interesting thing from colleagues I hear in Silicon Valley
Market's starting
is
to hit lows again,
you can't be too
or at
heavy-handed
least lows
about
in
it
current
because
trend.
you have to balance it against, innovation and not crushing these things. And I think that's where, the country needs some regulation, probably some firmer AI laws and copyright laws. Some of the states, Tennessee, have come out. Music, for example, they've done some acts called No Fakes that I think have been helpful. But this is for sure potentially disruptive if it isn't kind of, corralled in terms of some type of regulation and then partnerships in the industry.
When does this become a problem to stock prices? I mean, does it hit the bottom line somehow? I think, as investors are listening to this, they're going to want to know the major question. I mean, we could go through all the innuendos of this one or that one took this copyright, but in the end, how much does it really matter? I mean, you did say there were a lot of cross-currents. Microsoft and OpenAI are behind some of the important AI platforms. The New York Times sued OpenAI. Amazon partnered for AI with New York Times. So there's a lot that goes on. But these names, Microsoft, Disney, people want to buy the stocks, and they don't want to hear that there's some big hurdle.
Yeah, it's interesting. I think it could become a problem. I mean, state the obvious. If there's large-scale infringement around content, I mean, that's obviously something that becomes very problematic. Again, I came from the music industry, and I go back 20, 25 years. We struggled with this with Napster, basically, and it almost destroyed our business. I don't really see that happening right now, but there have been, a lot of things like fakes and a lot of volumes being shared around. I think that's an issue. But even more seriously, if you look at, say, the tech titans that you mentioned, whether they're chatbots or AI, to me, most of these things need to be moderated in some way with human moderation, not with AI. Meta has had some pretty frightening and upsetting things come out about what its chatbots are capable of doing, particularly for younger audiences, right? And that's definitely not good for the stock price. So I think, it kind of depends on what you're looking at. In the core industries that I'm experienced in entertainment, I tend to see AI, provided that it's kind of partnered and there's some regulations around it, as a really helpful part of the ecosystem for things like production and cost reduction. And there's a ton of cool things that artists and creatives can do around it. But it's sort of early to make big generalizations around it.
I know you're following so many companies all day at the same time, whether it's music and streaming and all these things. Just tell me, what names do you think are real winners for 2025? We finish by Christmas time. We say, you know what, really a great showing by what companies?
Oh, good question. I mean, I'm still a fan of Universal Music Group. in entertainment. I think, they're very, very strongly positioned. Sony, my alma mater, I think comes out of Japan, so it's a little bit more difficult to recommend from the American markets. In the entertainment business, I'm still quite a big believer in Disney because I think, Mr. Iger and his team have just done a terrific job with kind of aligning all their assets, that they're going against the grain of what some of their competitors are doing. So I'm still a big believer in that. And, I've also worked at Microsoft, and I think Satya has done just a tremendous job with, enterprise business, basically, and has really rationalized what the company's strategy is. So those are probably three that I'm a fan of. So.
Thank you. Seth Schackner, Managing Director of Strat Americas and Digital Business Executive. Thanks for joining us here on the show today. Good to see you, Seth. Thanks. All right, coming up, we'll cover the health of the U.S. economy, the long-term outlook for the tech sector in particular. Right now, the 10-year bond yield is sitting at 4.45. Stocks are still holding on to gains all day long, though off the highs, but still, the Dow is up 301 points. We'll be right back.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Back to the watch list. I'm Nicole Petalides. We welcome in Anthony Sicaro, President of Providence Financial and Insurance Services. Thank you for being with us. So many of the guests still think the path of least resistance is still to the upside. They're feeling more positive than negative, even with the, there's always that black swan event that could happen. But for the most part, trying to still navigate a market that could move higher. Where do you think we are?
Yeah, we're certainly in an interesting scenario. Everything's kind of come down. GDP has come down a little bit. Inflation has come down, which is good. The labor market has softened. And all of that leads to a conclusion that we're going to have a slowdown at some point. Whether it's going to lead to a recession or not is still yet to be determined. The reality, though, is that we are slowing down. There are cracks in the consumer, where 70% of the United States GDP is based on consumer purchases, consumption. And as the consumer goes, so does the economy. And the consumer is starting to crack. Debt rates increasing, savings rates are going down. So we definitely have a slowdown that I think is on the horizon. So it's interesting that the stocks keep marching up, almost as if the slowdown is just not going to happen. Stocks are pretty good at forward looking. But in this situation, it feels like they're not forward-looking. It feels like they're looking right at what's going on today and not taking a look at what's going to happen 6 months from now. So really an interesting dynamic.
Understood. So at this point now, I mean, for inflation, the one real wild card, in addition to tariffs, could be energy, right?
Oh, for sure. I mean, especially with this war going on now, right? With those two countries, Israel and Iran. If the United States is involved, depending on the level of their involvement, energy prices are going to go up. That's why we saw oil go up as well, too, for a lot of reasons. So energy is certainly a wild card. It's if you think that the war is going to continue and you think that the U.S. is going to have a stronghold in that war, then energy might be a good place to focus on as well. But yeah, it is a wild card for sure.
Right, understood. The labor picture, what do you think there?
So when it comes to the labor market, it certainly softened. It was a couple of years ago that there were about twice as many jobs as there were available for each worker out there. So workers could kind of pick and choose. If they didn't like their job, they could go find another one and they'd probably make more money in the process. Well, that's become more normalized now. It's right now closer to a 1-to-1 ratio. I think the specifics exactly like 1.1 jobs available for every worker. So it's much more normal at this point. It's taking workers longer to go get a job.
About 19 minutes away from Power Hour. Let's see how we hold up.
And the labor market is still strong. It's not weak, but it's softer than it was before. The problem is the labor market is part of the reason why inflation has been so sticky. A couple of years ago, I know myself as an employer and a lot of employers across the country had to give raises to employees because it was such a strong demand for labor. And even though inflation has cooled down, the one thing that hasn't cooled down is wage inflation from the raises that were already given. I can't go back to my employees and go, hey guys, inflation's come down, so now I'm going to take back the raises that I gave you a year ago to keep you. I can't do that. And so that is a part of the big reason why inflation has continued to be sticky.
So I just had on Ted Weisberg, who said, look, I mean, what are some of the trades that you want to do to make some money? He said, well, I could stay in short-term bonds, 3-month bonds for a long time at this rate. I mean, that's always something. If the Fed does nothing, we're doing okay with that. Tech, he said, it's undeniable that tech has helped to prop up the market and that, do you think tech leads us higher to the point where we make new highs?
Well, I think that depends on what's ultimately going to happen with consumption and with the consumers. Tech is generally a good play in a lower inflation environment where there's just steady growth. If we get into a situation where we have a recession, tech is going to be the first thing to go. It's going to be the first thing to lead us down. Usually in up markets and good times, tech outperforms, and usually in bad times, tech underperforms. So I think it depends on really your thoughts. The 10-year treasury being up at what, 445 or something like that, I think. That certainly has an impact on tech as well, too, because that's competition to tech. I like tech from the standpoint of the fact that AI, there's a lot of AI momentum. And I think it's good for a long-term growth play. But if you think there's going to be a recession in the next 6 months, it may be something to hold off on for now and think about getting in later. If you think we're going to avert a recession, then tech's probably a good play. So it really just depends on your outlook going forward.
Yeah, you said consumer staples look attractive. You also mentioned defense stocks.
Yeah, if we're going to be in this
consumer staples and defense.
Yeah, if we're going to be in this war, I think aerospace and defense is probably something that you do want to look at for, I think, reasons that would probably be obvious, right? That sector does really well when we have wars because the demand for those goods go up. If you think that we're going to go into a recession and you're along those lines, that train of thought, then consumer staple probably makes sense because people are going to buy the staples for their household regardless of whether we have a recession or not. If you don't think we're going to have a recession, if you think the market's going to keep going strong and you think the consumer is going to continue being strong and continue spending their money, then maybe you want to look at consumer discretionary. There aren't a lot of people that are going down that road. I think that's very, you got to be careful. I don't think that that's the direction that most economists and advisors would recommend. Consumer staples probably over consumer discretionary with where we are right now. But a lot of it depends on your outlook on the market.
And then the big picture of what happens with tariffs and then with the big, beautiful bill and Iran and Israel. You have three sort of things looming.
Yeah, they're all there and they all interconnect. There's not just one thing that's going to affect the market. The big, beautiful bill, the impact from that is going to be the taxes or the lack of tax increases that are supposed to happen in 2026. And that's something that certainly will help Americans. If the taxes don't get extended, if the Tax Cuts and Jobs Act does get extended, then there's going to be more money in people's pockets for sure. Tariffs, same thing. Where are we going to land with the tariffs? I think, right now 10% is kind of that standard number. And I think with 10% increase across the board, I don't think there's going to be a huge impact on the consumers. Companies are going to be able to eat that. There's going to be some negotiation. I really don't think it's going to be a big impact. And we haven't seen inflation jump with tariffs like everybody said. I think the PCE is sitting at 2.1 at this point, and it hasn't jumped. And last time when he did tariffs in his former term, they didn't jump. So it depends on where they really settle in at as far as what's going to happen going forward.
All right. Anthony Sicaro, thank you. President of Providence Financial and Insurance Services. Thank you. Good to see you. Appreciate it. Still ahead, we're bringing our panel talk all about energy. We've already seen a lot of volatility. We want to talk about some of the stocks, but particularly the tension between Israel and Iran and what it means going forward for energy prices and stocks too.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
We want to bring in our panel, talk all about the outlook for energy and the prices and the stocks. Ellen Wald, author of Saudi Inc. and president of Transversal Consulting, and Ed Butowski, managing partner, Chaplin Investments, both with us. Ed Butowski, we see oil, we saw it go up to $77. We remember it at over $100. Wasn't that long ago in the last few years. What say you as someone who's not just oil, you're a big picture macro investor, you've been following these markets for many years. How do you feel about the current situation?
Well, I'll tell you, it's an interesting dilemma, because you would think that when there's a conflict in the Middle East, it's going to raise oil prices. But a lot of the oil has been decentralized from the Middle East. You have Venezuela, but the United States is producing about 17% of the world output now. So you don't have as much reliance on the Middle East as you did before. And to me, that's a really good thing. And you see that the United States isn't going to be impacted as much. And oil prices going down today is really a head scratcher for me. It's very difficult to, it's very, very difficult to follow.
Right. Ellen, what do you think? What do you make of it?
So I make of this is that oil prices really overshot last Thursday night and Friday when the attacks on Iran started. I think there was a feeling that, this was all out. They were going to hit the production facilities, the export facilities, and as that has not materialized, and in fact, Israel has confined its airstrikes to nuclear sites, missile defense, missiles, really the only energy infrastructure that Israel has hit is that impacts domestic energy in Iran, natural gas production, a refinery, etc., that they're realizing, or at least the oil market is realizing that this isn't the big blow-up event that they thought it was going to be, that the movement of oil and oil supplies out of the Middle East is not being affected, and that it may not, in fact, be affected by this at all.
And in the meantime, go ahead, Ed.
I just want to add that only 3% of the world's oil output comes from Iran, and they send most of it to China and Singapore. So it's not a world dilemma at this point.
It's not, but if, for example, the Strait of Hormuz closes, that could really disrupt transportation. And I saw Deutsche Bank, for example, said oil could surge to $120. Now, that's more of a worst case scenario, right, Ellen? Is it? Or is it a
I would say that's
scenario?
Apocalyptic disaster style
right.
situation. Yeah, what we're looking at here is really the only way Iran is even going to threaten the passage of other tankers and other oil supplies out of the Persian Gulf is if it has no capacity to export any oil. It has to have absolutely nothing to lose. And right now, it still has a lot to lose. We are talking about 20% of the world's seaborne oil exports do go through the Persian Gulf, but no one's threatening Saudi exports. No one's threatening Iraqi or Kuwaiti exports. That is not going to happen unless Iran's oil exports are disabled.
And what do you think about being an investor in energy stocks, Ed?
Yeah, I'm not. You have everything in the world pushing oil prices down. You have more oil coming out of the United States. You have just a tremendous amount of oil, and OPEC has stayed relatively stable at this point. They haven't said that they were going to raise production or lower production. So I'm not an investor who's looking at oil stocks right now. I think the oil stocks are going to go lower. The dividends are going to remain pretty steady, but I think oil stocks are going to go lower along with oil prices. Same thing with pipeline companies. Even though pipelines, are more about the liquid that goes through them, not the price. But if you look at a chart, you'll see that oil prices and pipeline companies all go up and down together. So I'm not an investor in any of those.
I see. When we think about what energy brings to investors and how the price change could change the picture. Where do you see energy prices really fluctuating in the next 6 to 12 months, Ellen?
I do think it depends on how this all plays out between Israel, Iran, and the larger picture. It also depends on how things play out with Russia. Right now, we are in a period of relatively low oil prices. I know it may not seem low compared to, say, what we saw during the last Trump administration when we had prices, I think at one point were in like the 40s, but they are really quite relatively low. And it does seem like supply is abundant, although there are concerns that producers in the Permian and other areas are, at least it's not going to be increasing as much as it has. Potential for some declines perhaps could influence prices in the next 6 months, 12 months.
And just, in 30 seconds or less, not to minimize the story, but you talked about masses of hungry, hot people without clean water. What is the picture there that could be happening? And you may have a regime that can't maintain control. What does that mean exactly, quickly?
Yeah, I think a lot of that depends on how the airstrikes go in the next week, whether or not Tehran is going to become completely disabled and whether you're going to have people really suffering. If that happens, then it could really pressure the regime to the point where we do start to see the collapse of power if they can no longer maintain their control over, say, a city like Tehran or another big city. We're not at that point yet, but it's definitely something to watch for.
Great to see you both. Ellen Wald and Ed Butowski. Ed, Ellen, thank you.
And thank you, friends, for being with me here on the watch list. I'm Nicole Petalides. And keep it right here. We have a 305-point gain after a big sell-off on Friday. Oil is down $1.72, so you have that behaving at the moment. But anything could happen at any time here on Wall Street. So keep it right here. Market on Close is next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Got Power Hour coming up in just about 30 seconds.
With an hour left in the trading day, let's take a look at where the markets stand right now. As we take a look at the S&P, seeing a lot of green here, up almost 1% on the S&P. NASDAQ up even higher, 1.4%. The Dow up 0.75%, and the Russell up at 1% at 21.69. As we take a look at some of our futures products, let's take a look at the dollar, gold, crude oil, and Bitcoin. A lot of red except Bitcoin today. The dollar trading at 97.54. That's down 0.2%. Gold down 1.4% on the day at 34,490. Crude oil trading at 71.17. That's down 2.5% on the day. And Bitcoin up 3% on the day, north of $108,000. We'll talk about our futures products later on in the show, but let's kick things off with a look at the broader market and bring in Kevin Hinks, our senior equities contributor here on the Schwab Network. Kevin, thanks for joining us as always.
Order filled.
Hi, Marley. You know, interesting day after Friday's sell-off. You've got kind of a de-escalation across the market today. The indices are up. You got gold down. You've got the VIX down. You've got crude oil down. All the things that were higher on Friday are reversing, even though crude oil is, almost $2 higher than its lows of the day. But, 8 sectors of the S&P 500 are higher, with communication services and information technology leading the way. On the downside, energy, not surprising, with crude oil down. Healthcare, with UNH down and a couple others. And then utilities are lower. Every other sector in the S&P 500 higher, Marley.
And you mentioned crude oil, Kevin, so I have to get your thoughts. We've seen a lot of movement, of course, with the escalating conflicts between Israel and Iran. Hopefully some normalization here. What are your thoughts on what we should expect to see from crude in the coming days?
I think crude oil went to almost a worst-case scenario price on Friday, and then it's worked its way off that, as I believe the most important part of the problems between Israel and Iran is the Strait of Hormuz. If that remains open, then a lot of the effects of this won't hit the crude oil market. If ships can come through there, ships from Iran to China, ships from the Middle East to the U.S. and other parts of the world, I think crude oil may dodge this. Now, that's if it stays like this. We don't know if it's going to stay like that. There's still, crude oil has rallied down from the mid to high 50s to the high 70s before coming down. Now currently sitting right at 71.18 as we get to the 3 o'clock hour in New York.
I saw a report earlier from J.P. Morgan and another one from Deutsche Bank saying worst case scenario, we hit 120, 130 a barrel if we do see that straight close. Do you think there's a possibility of that even happening, Kevin?
Well, a lot of more escalation would have to happen, I believe. Doesn't say it can't. I never say never, because we've seen crude oil up there before, and now you've got war where you had war in Ukraine and then in Israel and in the Gaza Strip. Now you've got it in Iran as well. So now you've got 3 difficulties popping up. So could oil escalate? Of course it could. Could oil move over $100? Of course it could. Right now, it's telling us that it's not ready to do that. And like I said, that Strait of Hormuz is such a key area for crude oil.
And of course, these crude oil prices, this rebound that we're sort of seeing, this correction here as it looks like things may start to normalize geopolitically, at least between Iran and Israel, some hope of a resolution there. Doesn't make a huge case for the Fed to do anything in their meeting this week. I'm seeing across the board wide consensus, no movement. You on the same page there?
Exactly right. Now, we're not expecting much of an announcement at 1 o'clock Central Time on Wednesday, but we are expecting some news, which is like the summary of economic projections. That'll be a key part of that news release. And then Jerome Powell's comments at 1:30 Chicago time, 2:30 Eastern will be very important as not only the S&P, but then Jerome Powell sets the tone for the rest of the year. When are they going to start cutting interest rates? How many times are they going to start cutting interest rates? Is that number going to move? Is it 3? Is it 2? Is it none? What's it going to be this year? I think a lot of remember, the Fed's been extremely quiet and on the sidelines most of this year, with Jerome Powell taking let's wait and see. We need more information. The tariffs, remember his famous comments at the Economic Club of Chicago kind of sent markets reeling. I think he's been very quiet since then on what he sees the overall economy doing. So the Fed, wait and see. The quiet Fed is causing it's causing a quiet bond market.
A very quiet bond market. Now, I do want to move into stocks before we have to say goodbye. I know you always have some on your radar. Who are you watching today?
First, we're looking at BetMGM, the joint sports betting venture between MGM Resorts and Entain. Raised its annual revenue and earnings forecast for the fiscal year 2025. So BetMGM is higher on the day by about 8%. So having a real good day there. The other one I was looking at was Coinbase. Rosenblatt came away from Coinbase's annual summit optimistic about the industry and the company's growth potential. So Coinbase getting a nice upgrade here with significant changes in the political landscape. The benefits will be far greater than expected. And the current rally in crypto prices is just getting started. So Rosenblatt came away bullish on crypto and bullish on Coinbase, Marley.
Bullish on crypto seems to be the story right now, Kevin. You know, we see when we started to see on Friday more of the geopolitical conflicts come up with Iran and Israel. We saw people moving back into gold and crypto as well. It seems to be this sort of alternate safe haven. You know, I'm looking at the note right now saying crypto, this rally in crypto prices is, quote, just getting started. Do you think that's the case? And if so, how high could we go?
You know, crypto's it's a mystery to a lot of traders because we just don't know how it gets its value. Now, as it gets more and more accepted across the trading world, it gets more and more popular, and slowly but surely people start adding more to it to their portfolio. And you've got companies now whose main investment focus is cryptocurrency. So crypto is a mystery to me, Marley. I don't understand always what it does or how it makes its money or how it appreciates in value other than more buyers and sellers. But cryptocurrency is here to stay, at least for the time being, and everyone should at least try to understand what it does and why it moves up and down. It's, like I said, it's a mystery sometimes.
I feel the same, Kevin. If you get your hands on that crypto crystal ball, please let me know because I would love to see what's in it. I feel the same as you. It's a constant mystery to me as well. Again, Kevin Hinks joining us this afternoon. Thank you, Kevin. Let's keep the conversation going and welcome our next guest. That's Eric Sterner, the Chief Investment Officer of Apollon Wealth Management. Eric, thank you for being with us this afternoon.
Thanks for having me.
Of course. Now, how are you feeling about a market on the rise as geopolitical tensions are rising in tandem?
Yeah, I mean, certainly there's just some added risk with the market. We already had some geopolitical tensions between Ukraine, Russia, and what's been going on in the Middle East previously. And I think it seems like the market now is shrugging off what's happening with Israel and Iran, and especially on the news that Iran seems to be willing to talk. There was a lot has changed in the world where the U.S. was highly dependent upon oil, decades ago, where in the 80s, oil imports represented about 3.1% of GDP. But now the U.S. is a net exporter. So I think that's why the market is, well, certainly paying attention to the conflict, and we could see some more volatility if it escalates further or if other countries are drawn in. But for the most part, the market's moving past that conflict right now.
We've seen a lot of that forward movement and even some desensitization from the markets. As I went through your notes, you said that you remain optimistic the S&P's rally still has legs to it. Why is that? What are some of the reasons?
Yeah, I think the labor markets and consumer spending through everything over the past several years have remained so resilient. And if those two hold up, and I believe they will, I mean, we just saw a health checkup on labor markets not last week, but the previous week. And it was a good mixture of both good news and bad news. But overall, it's still very healthy. So as long as those two hold up, consumer spending driving 2/3 of GDP, I'm optimistic. I think the biggest fear is not necessarily tariffs, but the consequences of tariffs or having this uncertainty of what the final trade policy will be. It is holding back some companies from hiring plans, from capital expenditures. So hopeful we'll get some news this week out of the G7 summit of maybe some potential talks breaking through with some of our major trading partners. But that's really the risk that concerns me the most. It's just this cloud of uncertainty, which is holding back some companies from hiring capital expenditures. But overall, their corporate profits are still very healthy, and we've yet to see anything come across in inflation. Of course, some of that is there was some front loading back before the tariffs took place, but the disinflationary trend is in place right now. We've seen several months in a row of inflation coming below expectations.
So first thing I want to touch on is that cloud of trade policy uncertainty. Do you think that we are on our way to clarity in that? We know obviously the G7 having their meeting this week, but what sort of timeline is acceptable, and at what point will you become worried?
Each day brings a little bit more worry. Certainly, I think if we're 2 months from now still talking about these trade negotiations and there's still just not structure in place, there's still a lot of uncertainty, then I think then we could potentially see a pickup in layoffs, because then corporate profits could be deteriorating, and that may in turn cause some layoffs. I don't think I don't think that's not my base case of what's going to happen. But we just need to see some of these trade agreements in place so companies could plan for the future and just understand whether they want to absorb the tariffs or redesign supply chains or pass those tariffs on to the clients. Right now, it's just a big question mark, and there's nothing the market hates more than uncertainty.
Absolutely. And with all of that uncertainty, a lot of talk about these reinflationary fears. Do you think that they're warranted, or are they overblown in a way?
I do think they're overblown. I mean, like I mentioned before, we've seen inflation coming down, and yes, we will see maybe some bumps with tariffs once they come and appear in some of those reports. But overall, many companies aren't going to be passing on those tariffs. In fact, in the New York Fed district, we saw that a third of manufacturing companies are passing those tariffs on to clients, and in the services sector, it's about 45%. While on the other side, 25%, both in manufacturing and service, are absorbing all those tariffs. And then in between, it's companies that are absorbing some and passing on to others. But I know that inflation, and we talk about it, and the Fed called inflation transitory after COVID, and they regret calling it that. But I think this is truly a case where we're going to see the inflation bumps being transitory in nature, because what really fed the inflation and what it caused to get out of control after COVID was just all the fiscal stimulus. We saw imbalances in the labor market with many people retiring after COVID, and that's not the case in the macro environment today. There's not going to be that massive fiscal stimulus, so if something does cost more, it's just going to take less out of consumer spending, and consumers are going to need to adjust their budget. So that's a long way of saying I think these tariff concerns are overblown, and that's why I remain optimistic for the rest of the year.
All right, so while we're talking labor markets and inflation, we of course have to talk about the Fed, with that being their dual mandate. What do you anticipate coming out of this week's meeting and also in future meetings for the rest of the year?
I don't think we're going to hear much news. I mean, certainly the dot plot will be interesting. But I'm expecting 2 rate cuts later this year. Hopefully the first one coming in September, then potentially in December, and then maybe the Fed goes into every other cut, just because they are going to be cautious, not knowing how these tariffs will affect inflation. But for this meeting, it will be interesting to see what the Fed's projecting as far as number of rate cuts for this year. We've certainly heard some different talk out of the Fed with some hawkish tone, and then Christopher Waller seems to be some member, one representative of the Fed, where he feels we should start cutting now, and tariffs will be transitory in nature. So it'll be interesting looking at that dot plot and where the majority of those Fed officials are anticipating the Fed rate cuts to come for the second half of this year.
And I saw also in your notes that you don't have the recession as your base case, but what do you think our odds are that we enter one?
In any given year, the chances of a recession are about 15%. So I would say they're slightly elevated right now, because we know the economy is slowing down. Consumer spending is moderating, and it's very top-heavy right now, where the top 10% of earners are representing 50% of consumer spending. So that's a little concerning. So if the average odds of a recession are 15%, I would put the odds of a recession this year between 20 and 25. And certainly if we get some trade deals done, I think that would lower that probability. And like I said before, if we're 2 months from now, we're still wondering when these trade deals are going to take place, then I would increase those odds for the remainder of the year.
And with all this discussion of uncertainty and potential recessions and when the rate cuts are coming, we've seen a lot of adjustments to investing strategies out of pretty much every firm. What are some of the ones that you think are the most effective right now during these uncertain times?
Yeah, well, we always have to prepare for those lower probabilities. So we are really leaning more into the quality factor when we look at investments. It's not a complete risk-on environment. So we're really focusing on companies that have a solid track record of earnings, solid cash flows, solid earnings, balance sheets. And certainly, when you look at the mega techs, I mean, they fit that bill. While they've been knocked for their valuations, we see in the market when there's any turmoil, whatnot, we see a lot of inflows going back to those mega techs. But there are some other sectors that I do like. Utilities is a great example where it's traditionally a defensive sector. But because of the AI revolution, I think it's going to change its perception because it's really going to benefit from the AI movement, more data centers. In fact, the demand growth has been about 1% for the last 10 years, but it's expected to jump up to 6 to 8% for the next 10 years. So that's another sector I like that can work both, whether you're looking to play defense or offense later this year.
And how about international equity exposure? We're hearing a lot more about people putting money into international equities. Do you think that that's the right move?
Yeah, I'll always advocate for some exposure to international. And as we backpedal from globalization and we see more of these nationalistic views and opinions, you're going to see some slight decrease of the correlation of U.S. equities to international equities. Yes, I mean, there's plenty of, especially our bigger companies have exposure all throughout the world. So I'm always going to advocate for some international exposure. I mean, right now I love within Europe the industrial defensive stocks and even infrastructure with all the stimulus that's being planned to be spent by governments, most notably with Germany. But I do expect for the second half of the year that the U.S. will be a better performer just for some of these tailwinds, getting past this cloud of uncertainty, tax cuts coming, even deregulation. So I'll always call for some international exposure, but I still I think the U.S. will outperform international, at least for the second half of this year.
Thank you so much, Eric. That's Eric Sterner, the Chief Investment Officer of Apollon Wealth Management. Now, coming up, we'll look into the world of aerospace and defense technologies and discuss a company that just made its public debut on Friday on the NASDAQ. We'll be joined by the co-founder and executive chairman of the company next on Market on Close. Stay with us.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Market on Close. I'm Marley Caden. Aero Group made its IPO on Friday on the NASDAQ, and the drone maker is rallying big on today's session after a huge day on Friday. Let's learn more about this company and welcome in Chiranjeev Kathuria, the founder and executive chairman for the Aero Group. Thank you for joining us today. We appreciate it.
Thanks, Marley, for having me.
Of course, we're glad to have you. Now, your stock's soaring again today. I'm taking a look, up almost 27%. You're more than triple the price of your initial public offering. You closed up 140% on Friday. What do you think is driving these huge moves in your first full 2 days of trading?
You know, I think it's the geopolitical environment and the aerospace and defense sector. A lot of stocks, AeroVironment, Archer, Joby, and Voyager Technology are doing well. And the current, use of drones in the Israel-Iran conflict or the Ukrainian-Russian conflict. And our drones, which are used for surveillance and targeting, which is the HQ-35 or the Hedron drone, we're one of the largest suppliers of drones in the Ukrainian conflict today. And we operate in the GPS denied environment. And out of the 1,000 missions we've flown, it's unbelievable. None of our drones have been shot down. And the other sector we're in is in, military training and pilot training. I think that's probably some of the reasons that drive value in the sector and our stock in general.
And Aero, I know, was initially
Let's see, market trying to push here.
and you held off in the wake of Liberation Day. What made right now the right time?
I think when we were looking to go public, the VIX was at 30.35. There was uncertainty on tariffs, and the market was very volatile. At this time, there was a change. The VIX was in its 18 to 20. The markets have settled down. They've started to understand the tariffs, and recent IPOs have been performing very well. And, we disdain all conflicts and hope for early peaceful resolution. But I think the day we launched also was the day that the Iranian-Israeli conflict also swelled. So it was a perfect timing. Then I think also in view of tariffs, a lot of our drones are manufactured in Denmark and we sell into NATO. And just with this backlog, we have now over a $250 million backlog just to NATO because of the performance and need of our drones and drones in specific. Warfare now has dramatically changed. I think we've entered a new area of UAVs and how war is fought.
And you mentioned that you are already selling drones to NATO and that there already have been deployed in the Ukrainian conflict. Is there any plan in place for you to create drones for the U.S. Armed Forces in the future?
That's a great question, Marla. If you look at the new executive order by President Trump, it's to focus on U.S. manufacturing, and each Army command is supposed to have over 1,000 drones. So that is the absolute focus of the company and the use of IPO proceeds. Since our drones have been so effective in overseas conflicts, we have factories in the US. We've already started prototypes and blue certifications. So within 6 months, we're looking to start, drone manufacturing and selling to the US DoD. We already have a military contract for military pilot training. As you probably know, the movie Top Gun, we're like the aggressor. We were one of the winners of the $5.7 billion IDIQ contract to train the U.S. Air Force, and we're well situated for $1.6 billion of that contract. So we already have top secret clearance. So it makes it easier to sell into the U.S. Department of Defense.
And I know that pilot training contract is one of the unique features that Aero has. But what unique capabilities specifically does Aero provide in the drone space itself?
No, excellent question. So one is our drones are used for surveillance and targeting. What's amazing, a drone that costs $100,000 is able to target and take out a tank that could cost 25 million. I think what is unique about Arrow, our drones have been battlefield tested in the Ukrainian conflict. Like we mentioned, we're one of the largest suppliers of drones in that conflict, and we operate in a GPS denied environment, and we haven't had a single drone shot down. We may have lost one to mechanical failure. I think that's what's unique, and each drone can be used over 500 times.
And I'd love to get your thoughts on what the outlook is for both the defense and aerospace segments with the rising geopolitical tensions that we have, not just what we're seeing from Friday, but overall, Ukraine, Russia, Israel, Gaza, now Israel, Iran, and it seems to be spilling over.
No, again, really good question. If you look at the EU put in $157 billion defense fund, NATO has asked each country to have 2% of their budget. Just for example, in Denmark, even a small country increased their DoD budget to almost $7 billion. So just the geopolitical environment for defense spending is increasing. Like I said, we've entered a new era of warfare. And then you can see what's happening in the United States with the new executive order and each army command ordering, additional drones. So I think especially in the aerospace and defense sector, it's going to be one of the most growing spaces, both military drones and eventually, our drones can be used for surveillance and other areas, border security. So even on the commercial side, you'll see the use of drones. And pilot training is going to become very important. You've seen in the Iranian conflict again of Israel's use of the aerospace. So pilot training, especially military pilot training, is going to become very important. If you look at AeroVironment, their stock, I think their market cap was 8.6 billion. eVTOL stocks are all over. Their market caps of Archer and Joby are all, I think, is about, Joby's about 1.6 billion. And Voyager, which just had their IPO, I think is at 3.2 billion. So I think the outlook is very good, and there's stable contracts from, government agencies, especially the Department of Defense.
And one last question for you, Chiranjeev. As we look at drones and how they're changing modern warfare and how we get our information and how armies are acting, right now, primarily reconnaissance is their use. Is there a time in the future when drones become armed?
Yeah, I think, one is our drones are used for surveillance and targeting. And there's always, a chance that, drones, become armed in the future. Absolutely.
Well, thank you so much. We appreciate it. And congratulations to you. As I'm taking a look now, you're up 28.25%, still at 3 times your IPO price. So congratulations to you. Again, that's Chiranjeev Kathuria, the co-founder and executive chairman of Arrow Group. Coming up, we've got Options Corner. Kevin Green will join us with the levels to watch as we head into the close. We're back right after this.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Market on Close. It's time for Options Corner, so let's bring in Kevin Green to take a look at some of the levels he's keeping an eye on. Kevin, what caught your eyes today?
I'm sorry, Marley, what did you say?
Oh, what's on your radar today? What are you keeping a close eye on?
Yeah, definitely. I mean, obviously, we had a nice little run to the upside here, and we're actually still holding gains up about 0.8% for the S&P 500. But we have been flagging here over the last couple of hours, which is a little bit concerning. But once again, we're still in the green so far. Earlier this morning, we kind of talked about the 60-45 level, the midpoint between 60-50 and 60-40. That's where we actually saw a significant amount of activity early on this morning. And we actually did see the market try to attempt to break through that 60-50 level, but we've been kind of pulling back here ever since. You could say this is a little bit of an expanding megaphone pattern, just meaning that we have obviously a little bit of a downtrend here, but we also have a fair amount of price action and price movement. Now, when you look at it on a longer term time frame, obviously it's been kind of a slow grind to the downside after those highs here, but I'm actually looking at 60-20 as your first area, a major support for us to really try to bounce off of here. And if we are able to do so, try to break through that upper resistance on the megaphone pattern here, try to reclaim that 60-40, 60-45-ish level. If we do break below 60-20, looking at 6,000, you really don't want to see a complete round trip going into the close or even closing at the lows. I don't think that would give a lot of confidence for this market here. But something that's a little bit different that we saw today compared to maybe some trading sessions last week here is the expansion of market breadth. You are seeing a lot more of a risk on tone in this market as well. The right ratios or the risk on type of ratios are actually holding up fairly well. You have tech versus utilities. I actually have this on a chart here. Been looking at this tech stocks versus utility stocks ratio here. Last Friday, we did see that actually kind of invert a little bit. That has been kind of happening since Thursday and Friday of last week, which also complements maybe that pullback that we have seen, some of this geopolitical risk. But today we did see a nice little rebound when it came to this ratio here. And if it does kind of break down, you started seeing utilities really outperforming tech, I would be a little bit more concerned today. But just given the fact that we have a broad amount of sectors participating, volumes looking actually fairly healthy here today, seems like the market's really trying to discount a lot of the risk that we are seeing overseas.
So with the short gamma position that we're seeing in that sort of downward trending megaphone, what kind of catalyst do you think we need to get that bounce?
Well, what's really nice when you have markets like today, where you kind of have a very small range when it comes to these support and resistance levels on the way down. So it really doesn't take much to really move price. It's really just going to be volume. So a decent market on close order to the buy side could really kind of jolt this market back higher. Any type of news flow, obviously here, but a lot of people will be watching the 60-20 level, see if some buyers really do step in. And if they do, you could actually create like this domino effect to the upside as well. The opposite could also happen. If you have any type of meaningful breakdown on the downside of 60/20, you could also get some sellers to really kind of step in here. But it's harder to sell a market off when it's not in concentrated names, if it's not in concentrated sectors, just like communication services and information technology. We have other sectors that are also participating. So it's harder to really kind of erode a lot of the gains that we have for today because of that makeup. Not saying that it cannot happen, but I would expect maybe some buyers to really try to step in there, really hold this line, try to at least compress this market, eke out some gains, and then try to see some follow through tomorrow.
And you mentioned volume, with the summer months always being a little bit quieter. How was our volume today? How were things looking?
Yeah, volume is actually pretty good. I mean, if you look at Friday of last week, obviously we had a little bit of a sell-off. Volume was fairly high to the downside. If we're looking at the S&P 500 up versus down volume, difference here. Last Friday we had red candle to the downside, but today we are seeing a nice little reversal, a fair amount of volume for those stocks that are actually in the green so far today. And so you want to continue to see that throughout the close. If you're looking at the seasonality effect, Marley, I probably would discount that a little bit for the next couple of trading sessions, not only because of the geopolitical risk that we have, but also some of just the market driven events that we will have on the calendar as well. We have retail sales tomorrow. We have a Fed meeting, an announcement on Wednesday, and then we have the holiday. And then on Friday, we have June options expiration, the quarterly expiration. So we should actually expect a fair amount of volume on that day as well. So hopefully we can keep volume at these current levels, and you don't want to see something that's completely too outsized, especially to the downside. That might not be so great for the market, but we are not at anemic levels right now. We're actually holding up pretty decently here.
And we do have some data coming out this week, and you mentioned we're in a shortened trading week. What do you think is going to be the most impactful thing we see this week, or what are you specifically keeping the closest eye on?
Yeah, from an economic data standpoint, I would say it would be the dot plot, actually. We're not expecting any type of cuts, but really trying to see how the Fed really kind of threads the needle when it comes to economic growth on the GDP front, as well as PCE and the inflationary expectations moving forward. We obviously know that they're a little bit concerned when it comes to tariff policy. We have not seen tariffs really translate into meaningful inflation yet, but it might be something that's still a concern for them. And then you're going to have this complete bifurcation between what we are seeing for actual GDP over the last couple of quarters, over last quarter and potentially this quarter, and what their projection is going to be, which is probably going to be significantly off of what we actually are trending with now because of this dynamic that we have when it comes to global trade just in general here. I think something that is not on the radar is potentially the U.S. getting into this conflict later on this week. If you continue to see military build up, naval forces being moved, and if we do, for whatever reason, get into this conflict a little bit more aggressively, I think that would be a risk-off catalyst there.
Absolutely, and let's hope we don't get there. Thanks so much, Kevin Green. Coming up, we'll switch gears, talk about crude oil as prices have remained volatile as Middle East tensions rise. We'll figure out what levels we should be focused on and if a breakout in prices could be near. Market on Close. We'll be right back.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Welcome back to Market on Close. I'm Marley Caden. Now it's time to discuss crude oil prices. They seem to be easing as investors are optimistic the conflict between Israel and Iran may remain contained, but have been volatile over the past few days. I do want to bring in Scott Bauer, the CEO of Prosper Trading Academy. Now, Scott, take me through your thoughts on today. We've seen quite a move in our crude oil futures.
My thoughts are pretty much the same as the traders behind me here. Very perplexed. You know, maybe the run-up that we saw at the end of last week was a bit too much, but I think that every person that I spoke with over the weekend, given the escalation of what happened, would have expected crude significantly higher. And we did see that, you know, earlier, but now it really doesn't make any sense to me. Maybe the market in the traders are buying into the headlines that maybe, you know, the stance is going to soften on both sides here, but so far there's been nothing but escalation. Now, if you break down crude to the fundamentals, if there was not this big geopolitical event, you know, we'd probably see crude back in the lower 60s, maybe in a 50 handle, honestly. But at any moment's notice here, we know what can happen. We know about the Strait of Hormuz. We know about, you know, production being potentially cut off. So for right now, I do think this is a buy the dip, but only until this situation has resolved itself. Once this fracas, whatever you want to call it, is calmed down, and let's hope it's sooner rather than later, I think there's going to be a big sell in a crude.
So with that dip, you mentioned the potential for a $50 mark. You know, that's pretty close to where the Trump administration wants to see the price of a barrel. But oil prices, are we potentially going to see a breakout in the near term, you think? Could we hit that $80 mark? Because like you said, we're hearing reports that there might be some potential to ease the escalation, but we haven't seen any concrete proof of that.
No, we haven't seen any proof of that at all. In fact, if anything, we've seen the rhetoric ratchet up. I know Iran, you know, just a short while ago said that they're going to rain down missiles in Israel like nobody's ever seen before. So you don't really know what to believe. It is definitely volatile. It is difficult to trade, and anybody trading this, you've got to be able to use some stops. If things escalate, you sure could see an 8 handle. I don't think that's going to happen.
And I know right now we're sitting pretty near to that 200-day EMA. Do you think that that's driving even more attention to crude right now as well?
It probably is, but again, I think anybody that looks more at the fundamentals and technicals probably has to be on the short side of this. Again, when there's a development like this, you know, historically, this doesn't just go away in a day or a week. So I would expect the 7 handle, the 70 handle to really remain here until there's some concrete evidence that maybe, you know, there is some de-escalation here. But again, longer term, I believe crude is absolutely a short.
And speaking about that longer term, I noticed a lot of people buying protection, a lot of call options out of the money, trying to get protection against that real escalation. Do you think we'll continue to see that kind of action?
Well, wow, last week there was a lot of activity in upwards of the 130 strike calls going out July and August. We're not seeing that so much right now, but I do think that, you know what, everybody wants to have some protection on both sides, up and down. So that call buying, which was robust last week and volatility really exploding, that has calmed down a little bit. I would expect there to be more call buyers coming in.
And I do want to transition us here to Bitcoin. We do have to talk about them clawing back some of its recent losses. Last I looked, they were trading about north of $108,000. What are your thoughts on Bitcoin action today?
This definitely has been a buy the dip recently, with volatility in the crypto space and Bitcoin specifically so low. Something to keep an eye on is volatility is picking up. Typically when we see volatility really escalate in Bitcoin and the crypto space, that is the precursor to a very big move. And with the buy the dips that we've seen, you know, 105 has really has significant support over the last several weeks or so. So with volatility picking up, it would not surprise me if we see Bitcoin challenge those all-time highs and maybe even break them sooner rather than later.
You're not the first person who said that to us, Scott. You're not alone in that opinion. Thank you so much, Scott Bauer, the CEO of Prosper Trading Academy. And coming up, we will close out this market session. We'll get the big picture from the team at Charles Schwab. We'll discuss today's trading session and look ahead to this week's Fed meeting that kicks off tomorrow. Market on Close, we'll be right back.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day. From volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Market on Close. Just a few minutes left in our trading day today, so it's time to get the big picture. Let's welcome in Colin Martin, the Director and Fixed Income Strategist at the Schwab Center for Financial Research. Colin, thanks so much for joining us this afternoon. First, I want to kick things off talking about the Fed. We've been talking about them all day. We know they kick off their meeting tomorrow. What are your expectations coming out of this meeting?
Well, we're not expecting any change to Fed policy. That's basically priced in right now, where there's a near zero chance of any movement in the Fed funds rate, whether up or down. But this meeting is accompanied by an updated summary of economic projections. So we'll get an idea of where various Fed officials see the economy evolving over the next handful of quarters and years, and then what that means for their actual Fed policy projections, the so-called dot plot. What will be really interesting is how the inflation outlook has changed, if at all. Because if we go back to the last time we got an updated summary of economic projections, because inflation remained sticky at the time, the median projection for the year-end core inflation rate was revised higher. But what we've seen over the past few months is that it seems like the disinflationary trend has resumed. So it's going to be really interesting to see how those play out, and if they end up revising lower their inflation expectation, and therefore what that means for the path going forward.
So summary of economic projections, very important. And of course, constantly talking about the dot plot. Explain the importance of the dot plot, because I think it's the less discussed thing that everyone's focusing on right now, but obviously a paramount importance.
The dot plot's very important, but we always like to highlight that a lot can change over time. It's not a forecast from Fed officials. It's basically the projection based on where each official sees or expects the economy to be at a given point in time down the road. So you have to look at both the economic projections and the dots in concert with each other, because it's those economic projections that therefore result in what the Fed officials expect how restrictive or accommodative Fed policy to be at a given point in time down the road. Now, if we go back to the March meeting, we saw a pretty tight dispersion of where Fed officials saw rates being at the end of this year, at the end of 2025, where the median projection suggested 2 rate cuts by year end. but there were 4 officials who were expecting or were projecting no rate cuts, and 4 officials who were projecting just one. So there was a pretty large number who weren't seeing an urgency to do anything, or if they were seeing, basing their expectation on what they would do, a pretty minimal cut. So it'll be interesting to see if the number of cuts gets revised down a little bit from a medium standpoint, and if the median dot projects just one cut by year end. I'm not sure it'll change too much because as it stands in the here and now, we've started to see somewhat of a slowing in the labor market. Nothing that's too concerning just yet, but the pace of job growth and job gains has slowed. But more importantly, on the inflation aspect of the Fed's dual mandate, there's been a lot of concerns about what the tariffs might mean for inflation going forward. But what we've seen so far is that services disinflation might actually offset that. And that's not necessarily a good thing. That means slower consumer demand and maybe potentially slower growth down the road.
So you mentioned the inflation piece of the Fed's dual mandate. How do you think right now the inflation piece is comparing with the employment piece? And is the Fed weighing one more heavily than the other?
You know, right now, I wouldn't say they're weighing either more heavily than the other, because if you look at both independently, neither necessarily suggests the Fed should be doing anything. If we look at the labor market, for example, we've seen an increase in the unemployment rate from the lows of 2023 and 2024. We were as low as 3.5% or so. Now we're back up to 4.2%. I think that's a key reason why the Fed ended up cutting rates by 100 basis points last year, because of that weakening in the labor market. But over the past 12 months, the unemployment rate has traded in a very, very tight range. It's been between 4% and 4.2% for 12 straight months. So that suggests that Fed policy is probably in a good place right there. Fed doesn't need to do anything. If you look at inflation, it's come down off the highs, but then it kind of leveled off for a little bit. And we saw inflation readings in the 2.5% to 3% for most inflation indicators. That also suggested that the Fed was probably right in backing off in their policy last year and cutting rates. But because we've held steady, it makes the case that they should probably hold rates where they are for the time being. Now the question is what happens over the next handful of months, because the disinflationary trend that I mentioned before, it seems to be back. And if we look at core CPI, for example, we've had in 3 of the last 4 months a monthly reading of 0.2% or less. And if you look at that on an annualized basis, the Fed's at target. So I think they're going to be, debating whether or not they see cracks in the labor market forming or not. And if inflation is at their target on a 3-month annualized basis, are rates too high right now? So it's going to be really interesting to see how the projections come out, and specifically comments from Fed Chair Powell.
Well, we will have those answers in 48 hours. Thank you so much, Colin. We appreciate your time. Again, that's Colin Martin, the Director and Fixed Income Strategist at the Schwab Center for Financial Research. Coming up, we've got our closers panel. We'll recap today's session, and we'll get you ready for tomorrow, next on Market on Close.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library.
1 minute left here.
Articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Market.
Let's see if we break even here.
No politics,
Okay,
no
let's
noise. From bell to
see.
bell and beyond.
Available anytime, anywhere, on any device for free. Schwab Network.
Trying to, but let's go with green on the trade.
Order filled.
Welcome back.
Calling
You
it a
just heard
day.
the closing bells ring for today's session, and let's take a look how the major averages closed out. As we look at the S&P, we're up about 1%, closing at 6,033.52. The Nasdaq up 1.4%, 21,937.57. The Dow up 0.75% to close at 42,515.58, and the Russell closing up on the day 1.1% at 21,24.13. Now it is time for us to take a look at how the day finished. So I'm going to bring in our guests, Kevin Green, Senior Markets Correspondent, and Alex Coffey, the co-host of Next Gen Investing. Thank you both for joining us. Alex, I have you in studio with me. Kevin, we remote as usual. Alex, let's start with you. Takeaways on the day.
Yeah, I think you got to look at it in the context of Friday. Obviously, the geopolitical things that heated up in the Middle East brought tension. But I think more so there was a risk-off tone into the close because there was no way to hedge over the weekend. And so hedging activity, buttoning up of positions into the close on Friday for two major risks, just financial markets speaking. It could have spiraled into something beyond just a regional conflict. And two, crude oil really could have started to ramp up. So both of those things come Sunday night into Monday didn't happen. And so I think it's natural that you start to see the financial market uncertainty normalize.
Took another position here just to end the day, just a little small pop.
S&Ps, whether it was volatility, whether it was the bond market, whether it was gold, basically all of these assets, after their corresponding move in response to the event, have now basically normalized to where they were prior to the event. And to me, that's a pretty standard geopolitical trade. It doesn't mean that volatility can't come back. It doesn't mean that those risks have dissipated entirely.
Order filled.
There we go, calling it a day.
And then there's sort of a, I guess, normalization once
Lots of room, but just so you see here, we're up 262 on the day.
in the case of recent
Yep,
history,
just had a small pop there. Calling it good. Thank you for joining today.
that always can change, and in the future maybe it will.
Yeah, if you have any questions, just feel free to join up. Lots of room in the server. Just ask your questions.
Up a little bit too, like as people change.